understandably under pressure today as well. Pull that up. It's down about 1.3%. I wonder where it will settle. You know, the other thing is that Reliance Industries has been under a tad bit of pressure in the recent past. That continues to be the case, and that's proving to be a weight on the benchmark as well in the recent past. Also, pull up the private sector banks, HDFC, ICICI Bank, because they've been under a tad bit of pressure this week as well. HDFC Bank down 1.3%, ICICI Bank another 0.6% lower. So, Neeraj, I wonder if you're spotting anything from the broader markets.
Well, I'm spotting Newland. I'm spotting Cohan's Life. I reckon Cohan's Life could be facing a bit of a stick this morning, 7.5% lower. GRSC and Texmaco could be a big winner today. I haven't looked at the charts. I haven't looked at the numbers, the opening thus far. 13%, no surprise there, simply because they've gotten a very large order win. 4,000 crores export order is a big one for Texmaco. Well, I tell you, West Bengal companies are getting some good news flow in the last few days. But you know, this railway companies, the wagon manufacturers, Nirav, kind of written down after having a really good run 2023 and 2024. The last 12-18 months have been a bit sluggish. This is a large order win. Does it put Texmaco in a good space, because it's also an export win?
Well, yes, definitely. As far as railways are concerned, yesterday we did see some positive news coming in from Afcons, and today, of course, this Texmaco order. And an export order definitely means much more, because there is a possibility of better quality margins. Because
Nirav, I'm really sorry. I'll just have to cut you in there, and we'll let you finish this thought in a bit. But we've got a very important voice, and that is Nirmal Jain of IIFL Finance. Because what has happened, viewers, I'll just lay it out for you before we get in, Mr. Jain. The IT department has sent a tax demand of 476 crore odd, which I presume IIFL Finance will contest, and will ask Mr. Jain about the same. But the point being, it is about 1 quarter's profit, if you will. But a lot of people believe that this disclosure by the IT department now removes the overhang, as the worst case impact on IIFL Finance is now known. And this is the worst case impact I'm talking about. Nirmal Jain is with us, first and exclusive on NDTV Profit. Mr. Jain, thank you so much for taking the time out. And I'd love to know what you think about this, because you've been wanting to seek, or you've been seeking a resolution to this for some time. Is this the first step of the resolution?
Yeah, so the assessment has been concluded, and obviously we have enough factual and legal ground to contest it. So we'll go in appeal against it. Because over the years, you know, the assessment is for a block period of 6 years. And we always paid our taxes absolutely in full compliance with law, and, with absolutely full amount always. So this assessment order has come, and as you know, that we have right to contest it, and we'll go in appeal for this.
Okay. What are the timelines to that, Mr. Jain? I mean, do you get into an appeal ASAP? And pending that, is there any restriction on the ability of IIFL Finance to do business under various segments?
No, absolutely no restriction. You know, the tax litigation is, even without this search, there have been many tax demands which are under litigation, which are under a dispute with the department. So obviously there is no impact on the business as such, and never ever was there any impact because of the IT search or IT assessment or IT special audit. But once the assessment is concluded, then the next step is ASAP will go in appeal against it, and we'll put our case forth, where, we paid all the taxes, so the entire demand has to be contested fully.
Just to be absolutely clear, Mr. Jain, what you're saying is that in this 6-year block, which has been assessed, you do not believe, based on the study that you yourself or your team has done, that there is any tax outgo that was pending and that should be considered, right?
Absolutely.
Okay. All right, Mr. Jain, thank you so much.
Okay, wait a minute. I have a couple of questions. Mr. Jain, hello, are you there?
My apologies, Neeraj.
Yeah, well, maybe we can just
call him back.
We can call him back, but while we wait for that to happen, Kush Bora on the charts, because it's looking like starting off well. Is there a trade here if it starts off 4-5% higher?
not really been consolidating for a while. Before that, the bias was majorly negative. So I would wait up a little bit on this. Anyway, the resistance on the upside immediately at about 475, 480 zone. So maybe if it takes out those levels, you consider. For now, I would just wait and watch on IIFL Finance.
Okay, Nirav Asher, any thoughts here? Nirav Asher? Okay. I think we will just lost that line with Nirav Asher as well, interestingly. But Mayuresh Joshi is with us. Mayuresh, good morning. I don't know if you got a chance to hear Nirmal Jain talk about this thing, but they've got this final tax assessment. In some sense, some people are saying this is the end of the uncertainty that may have existed. The worst case demand is known. It is about 1/4 of profits, etc. How do you view this development?
Morning, Neeraj. No, so I think the worst is probably now getting penciled in with this assessment order probably coming through. And obviously, I think I was hearing Nirmal Bhai. I think they are probably going to contest that as well. And therefore, to a large extent, the regulatory woes with this assessment order largely should leave the demons behind them. However, I think what happens with the core business and other elements is a different aspect altogether. But yeah, you will see a sentimental positive impact onto the stock.
Yep, 6% higher. Now remember, viewers, for companies like IIFL Finance and some others, gold loan is a big part of their portfolio, right? And if indeed there are developments happening around gold buying, etc., it might have a bit of an impact. But today, I think IIFL Finance story is purely about this tax demand getting quashed getting a demand, not quashed, sorry, getting a demand. And the worst case scenario for IIFL Finance now known. It can only get better from here if it does. It can't get worse than this. This is about 1/4 of profit, which is why I think there is a bit of a thumbs up that has been given to this stock at the end of 8 minutes. What else has a thumbs up? Maybe Newland has a bit of a thumbs up.
Berger is doing well.
Berger is doing well. What might not be doing well is Cohance, is Dr. Reddy's, and some of the others. Pull up Cohance, pull up Dr. Reddy's. 7.5% down for Cohance. Dr. Reddy's, just a couple of percentage points. Actually, it's not that bad a reaction to Dr. Reddy's numbers with adjustments, etc. Might be okay. Okay, we'll watch out for that too. Sharad is here with the big brokerage call for the day. Sharad, what are you picked up today?
Neeraj, KI Industries, the stock I've picked up. UBS has downgraded the stock to neutral earlier. It was a buy rating, and the target price, however, there's a minor hike coming in from 5,300 to 5,600 rupees per share. They have stated that the company is well positioned, but the near-term upside is not there. It's quite limited. The company is a beneficiary of the electrification trend. Of course, this is a long-term trend we are talking about, but near-term upside is there in the valuations, and that is where this downgrade is coming in. There's a steady channel-led ramp-up is happening, but the rising competition is happening, especially in the housing wire segment. That's where a concern is coming in. But of course, limited capacity is there when it comes of the structural expansion, and this could actually limit the immediate gains. So it looks like a tactical report rather than a strategic report coming in from UBS on KI Industries.
Thanks. Cables and wires looking okay. Let's wait and watch what happens. The rupee, I think we missed the marking of the currency, but just pull up the rupee and see what that is doing in the morning as well. 95.53. Okay, well, respite. We don't have to look at new lows every single day. Mayuresh Joshi, Dr. Reddy's, just a couple of percentage points after the numbers that have come out. Would you wait for the stock to dip a bit if you wanted to buy at all? Or would you believe that instead of Reddy's, there are other opportunities to buy because some of the CDMO companies, for example, are throwing up some great numbers?
No, I think the reaction is probably muted, Neeraj. Honestly, I think looking at numbers, I thought that it might be a deep reaction after Reddy's. However, I think from the space itself, our own sense is that CDMO, CRM, and CSM as business verticals for pharma units probably should stand out over the next few quarters. And therefore, you've seen a kind of a reasonable move in stocks like a Laurus Lab, as an example, with a clear disclaimer that we are biased and continue holding stocks in our local and global portfolios. There is a smaller mid-cap company by the name of Sai Life Sciences. They're doing some fabulous work as it comes to CDMO or CRM and CSM as a space. Extremely strong margins, very good management, and the expectation in terms of business growth expected to continue on a very, very strong footing continues. You were just mentioning Newland Labs. I think fabulous set of numbers when it comes to the CSM and the specialty part of the business. The only flaw I can draw from Newland's number is that the top 5 customers in the CSF segment probably contribute 94%, which means client concentration relatively higher in one of their biggest businesses.
Okay.
Well, Alex, only 7%. I would have thought of much more, but it's only 7%, but no harm. Actually, that brings me to that question, Kush. I know I asked this to about earlier, maybe I'm stuck up on Newland, but just because it's given such a blowout set of numbers, between Newland and Cohance, is there an opportunity to buy or sell? Because Cohance too has that factor of Umang Vora, which led the stock higher. Is this dip a chance to buy as per the charts?
On a light note, I have a feeling that yours and Mayuresh's view on Dr. Reddy's and Newlands will perhaps be granted. Thoda ruk jao, 950, 960 tak. No, okay, not wish.
Let's help the viewers.
Not wish, but the view perhaps, will be, will just materialize because
no, you said view, thankfully. Yes.
Okay, glad. I was thinking wish, but yeah. No, Dr. Reddy's has already seen some, downside in the last couple of weeks, so that could perhaps be one of the reasons of the soft opening, but could, deepen. Cohance, good structure. The near-term structure is very positive. This dip I will take as an opportunity to buy. Volume accumulation very healthy because Newland's already been, doing its thing, moving higher. 18,200 resistance, being taken out, but could actually move significantly higher at open. I would actually focus on Cohance because the risk-reward ratio here is fabulously attractive. So about 425-ish is where you keep your stop losses for much higher targets of about 485, 520 plus.
Okay, just about 20 seconds left. Kush, any individual stocks that you're looking at post-market pre-open?
Yeah, so the theme for the day seems to be Pharma, and I'll stick to that. Ajanta Pharma is a stock that we gave out as a pick, so let's go with that. 3180, 3270 to reiterate the targets, and 3000 is where you keep that stop loss.
Well, we're not surprised it's a pharma name. We'll ask Mayuresh Joshi to immediately post-market open about something that he likes to. But since it's just about 15 seconds left, let's kind of stick to that. Let the music start. Hopefully, the market has some music to it as well, because it looked like it'll start off marginally, flattish to marginally higher. But maybe things may change in the first 5 minutes of trade. But here's how we're starting off. Flat, okay, marginally higher, yes. I'm happy this turned out to be true. About 0.5% actually now for the index, which very interesting. Market breadth is even Stevens, which is not too bad, but the Nifty mid-cap index is up about 0.6%. The small cap index should come up on your screen next, and that too could be doing well. About 0.5%, not bad really. Actually, a really good start relative to what some of the Asian markets were doing as well. Let's get the heat map up on the screen, see what is moving and what's not. Remember, crude prices are actually inched higher, but we have a fair degree of green, very little red. Dr. Reddy's is starting only 2.5% lower. Surprise, surprise, Asian Paints is up 3.5% higher. I wonder if I've missed some news there. Crude is high, so bear that in mind. There's not a crude reason for Asian to move this way. Has to be something else. Adani Ports, 1.4%. Hindalco and Tata Steel doing okay. Remember, we spoke about metals looking okay. Copper and some of the base metals have moved higher, so that's to be noticed. Adani Enterprises higher, L&T higher, HDFC Life higher. I'm really amazed with the quantum of green on the screen this morning. By the way, Dr. Reddy's, and just bring that stock up before I get to Alex, because I don't see in the list of the top 10 losers. Can we just get Dr. Reddy's individually on the screen? Because it's bounced back, I think. 0.87% higher. A really good reaction, a surprise positive reaction to Dr. Reddy's this morning. I don't think there were too many shorts in the system which are covering for covering as well. So it's a very interesting one. We'll ask Kush Bora about this, but Alex, good start, even if it's just 0.25% higher.
Neeraj, absolutely. And to the point on why we're seeing an uptick, could it be that over the last 4 sessions you've seen an erasing of 950 points on the benchmark Nifty 50
the Nifty itself.
for the benchmark, right? And so even the broader market's losing quite a bit of ground, and maybe some semblance of buying could come through on account of that. So maybe it's that. The question is, do we hold on to that, or do we once again see selling that emerges through the trading day? Pull up the sectoral heat map just to drive home that point and see whether that green on the screen is evident. It is in fact mostly a green screen. Metal is up about 1.5%, 1.3%. defense is bouncing back from the correction that it saw yesterday. Remember, it was one of the worst performers sectorally, up as much as 0.7%. Pharma is doing okay, 0.7%, and we'll have to drill down into some of those internals to see how individual stocks have reacted. We'll get to that in just a bit. Media down. IT down, just about flat though, with a negative bias. Not too much in the way of big cuts, even for the PSU banking index. So you'll take this actually. It may not be tremendous gains, but at least you're not seeing cuts at this point. Let's talk about earnings, because there are quite a few stocks that should be reacting, and among them, Berger Paints. It posted a pretty decent set of numbers, and you saw Asian Paints up. I wonder if it's in consonance with this 8% move. It well could be. About 8% up for Berger Paints. Newland Labs is having a decent start, but not maybe the start that we would have anticipated. 2.7% higher at this juncture. MTA Tech, a strong execution seen during the quarter, but lo and behold, it's down about 3%. So not necessarily any of the reaction that we were anticipating. Dixon Tech as well, a weak quarter, but the stock is up about 3% or thereabouts on the earnings. Let's see how that pans out. Gopal Snacks, highest ever quarterly revenue is recorded. The stock is up about 2.7%. Stovekraft, it's riding on the higher demand for induction cooktops, is done pretty well. Kalpataru, a strong turnaround quarter as well, doing okay, should be up about 4.7, 4.8%. Maxfin and Ratnavir also in focus on account of earnings. Bad earnings or relatively impacted earnings. You have Tata Power, which is seeing a cut of about 4.4%. Cohance was expected to see a negative reaction on the back of those earnings, 5.6%. A lot of brokerage downgrades also coming through for this particular counter. And now, beyond earnings, there are a few more developments. And Texmaco we spoke about on account of that big order win, a significant one actually at that, 4,000 plus crore, and it's up about 11%. IIFL Finance, that clarity that has emerged on the tax demand and the fact that it's going to be contested, up about 4% in trade. RVNL is up about 2% on account of an order win. And finally, I would like to pull up the jewelry companies just to see how they're reacting. Titan is not doing too much, but Kalyan, Senco and a few other names in the jewelry pack should be under a tad bit of pressure. I wonder if there's anything else from the broader markets, Neeraj.
I mean, yeah, there could be multiple other things as well. Alex, you are right. A lot of stock could be moving around. But I want to quickly get the opening opinion from both our guests, because Ajay Srivastava should be also joining in a moment. Kush Bora, to you first. And a word on Reddy's, of course, the way it has done. And any opening thoughts on the market or anything else that you spotted?
Yeah, see, Reddy's already in the first 5 minutes a volatile move where from green, red to green and then back in red now. I think the fact that it's already seen some sell-off in the last 2 weeks is perhaps giving it that cushion. Again, structure not very positive, so I wouldn't really venture a trade into it. Definitely not on the long side. As far as markets go, the opening's fairly in line with what GIFT Nifty was suggesting. Mild rebound after this massive sell-off of 4 days. Nothing to write home about. Right now, I would avoid indices, focus on stocks. Like we said, Ajanta Pharma, Gabriel India, just to name a couple of them.
Okay. Mayuresh, what has stood out for you in the last few days, weeks, earnings, non-earnings, etc.? Where is it that you find favor? What stocks are you recommending, if you will?
So, Neeraj, again, I think Pharma has been a standalone winner in terms of earnings delivery. And again, I think the expectation largely in terms of earnings stability expected to continue with a lot of key product launches expected to happen. A large part of that tariff imposition does not hit the industry hard as well. And therefore, I think Pharma is one sector which has performed really well in this earnings season. As I said, and I mentioned before as well, Sai Life Sciences on declines is something that we continue holding. It looks like a good quality mid-cap play within the pharma universe. Specialty chemicals, a few stocks out of that actually stood out. And the expectations as we are hearing the managements out make us believe that niche chemicals will continue doing well. The expectations in terms of supply chain issues obviously will hit a few companies within the sector itself. But Navin Fluorine, SRF, I think outstanding set of numbers, continue holding these stocks with a bias in our local and global portfolios as well. Navin is expanding capacities, the expectations in terms of margins holding up, diversified supply chains, and end user applications, specifically the capex that they're probably doing both in terms of their core segment, the multipurpose plant and the specialty segment as well. And the expected fixed asset turnover thereof should bode well for specialty chemical and a few players thereof as well. Metals and mining, Neeraj, surprisingly, I think the relative strength of this sector has held up, and the expectations of domestic capex expected to continue will probably keep a lot of these domestic mining stocks in focus. A large part of the move with good numbers have already happened for a lot of players within the space. Where you're talking about Calent Dispatch, Shah Metallics, Godavari Power as an example. But as the dynamics turn and change, both in the local and the global context over a periodicity of time, on the global front specifically, I think the numbers with expanded capacities and backward integration operations should hold up really well for these players as well. So I think more domestically driven at this point of time, shying away a tad bit in terms of consumer discretionary durables, both in terms of expectations of input cost hitting their margins hard in Q1 of the next financial year. And if monsoons probably are not as per expectations as one believes, the demand factor can also start coming up. So a little bit underweight in terms of consumer discretionary durables.
Got it. Okay. On that note, gentlemen, thanks so much for taking the time. By the way, you have an impact on gold ETFs that is visible. Pull up, for example, the Tata Gold ETF. It's showing an uptick of about 4.7% or thereabouts, and that reflects the increase in the duties that has been announced that comes into play today as well. Nippon as well. And these will broadly track that 4 to 5% increase on account of the customs duty hike and the other duty hike. Now, let's stick to earnings, or rather, let's stick to a conversation on markets. And we've got joining with us Ajay Srivastav, in fact. And Ajay, thanks so much as always for taking the time. Very good morning to you.
You sound to be nervous today. No, okay?
Me? I'm perfectly fine. I'm perfectly fine.
So you're not the investor in the market.
No, I'm perfectly fine. So you don't seem to be nervous at all. So let me start with that. The question to you, you're looking at the screen is a pop of green. We've seen cuts for 4 days in a row, and the broader markets have come off quite substantially. There are worries about the fundamentals and about the macro because of the announcements that have come through from the administration, the customs duty hike in gold. Are you worried at all?
No, good morning. First of all, you have to follow your model. And I think we have shared a number of times on our channel as well. The moment we switch to the model of 1/3, 1/3, 1/3, which is 1/3 global, 1/3 India, 1/3 precious metals and other metals, I think the life has been good and stable. And even today is proven to be good because at the end of the day, if your 33% of portfolio is in India, and that also in reasonably good stocks which are monopoly, I think you don't need to worry too much about the rest of the economy at the end of the day. Problem is where people are concentrated and leverage on Indian economy. I think that's where the problem is coming. And I think it's simplification to say that problem is because of the Gulf War. We had a problem before the war started, and that got exacerbated by now. So I think the key is allocation of your portfolio. I think that's where the magic and the mystery and the pain is. If you're all in India and leverage on board, I think you got pain on your hand. If you spread your money out, and I think you are doing fine because both other segments of the market, the global as well as precious metal, have done well. Indian monopoly stocks, if you look at stock exchanges, for instance, have done reasonably well without any problems at all. So I think it's a great market to be pick and choose, spread yourself, and enjoy the ride because you need to be part of the world. If you're part of the world, I think you're good.
Mm-hmm. Okay. Ajay, good morning.
Good morning.
And I wonder if that template continues despite the valuation upticks that we've seen in the semiconductor space. I mean, look at DRAM in the US, look at TSMC, SK Hynix, etc., Samsung in Korea, and those things are really zooming up. Does that continue to attract global capital at the cost of markets like India?
There's too much focus on the semiconductor, quite obviously, because they have gone up the most. But there are a whole host of stocks that you got there which do reasonably well. And the largest retail chain, Walmart, that's done really well in terms of performance and continues to be low. Oil companies, metal companies have done phenomenal well in terms of dividends, in terms of the returns on the asset. So yes, a large pool of capital gets allocated towards technology stocks, including things like quantum computing, which are the new age stocks, and privately placed money with things like Perplexity, etc. So I think the theme continues, but the thing is that you can broad-based. You got Korea on one side, you got Japan on the other side, you got Taiwan on the third side, you got US, which is really doing extremely well at this point of time, and not necessarily just the semiconductor stocks, including the banking stocks of US, you saw really flew at the end of the day. So I think, all in all, the end of the day, each economy responds differently to what's happening in the Gulf War or even before the Gulf War. The US, Korea, Taiwan, outperformance was before the Gulf War, not only after it. And the key, and rupee had to go down, so you get the natural uplift of that. So I think it's just not about valuation at this stage. There is enough firepower in those economies to look at different segments, including defense, for instance, metals, for instance, at that point of time, then just say ki only there's a one pony horse called the AI-driven chip stock. They're good, we hold them, but it's not necessarily that this whole market is just that and nothing else.
Okay. Ajay, in which case, the follow-up that I have is, the metal producers in India or the metal companies in India would also benefit with the base metal prices going up selectively, right? Copper prices going up should benefit Hindustan Copper or vice versa, some of the others. Are the valuations prohibitive in the Indian metal space, or do you find favor here?
See, we are continuing to hold non-ferrous. So, we are biased because we've been holding it for years. So we are biased to that. But because, not only the fact that, valuation wise, because rupee is falling and these products get indexed with what's the global prices. So they get a natural uplift on price. The key is they are monopolies. You can't create a zinc mine overnight. You just cannot do it. You can't create an alumina mine. It takes you 10, 20 years to do it. So, there are only 2-3 companies in India. That's the best part for investors. There are only 1 or 2 companies which are in the non-ferrous mining segment in this country. Okay. And therefore you can't go wrong in them. Yeah, you need to be patient with them. And you've seen in this year, for instance, which is we're looking at last 12 months, the mining company has been one of the best performers in the market at the end of the day. So I think you can't go away from the fact that monopoly mining companies in India will make tons and tons of cash. And as time goes by, government gets more desperate, new materials start to come in, silver prices, see what's happening. We are not naturally a copper producer at the end of the day. So we are very small in copper at the end of the day. But for other minerals, I think non-ferrous, we are pretty good, and it's a good place to be for years. Do not look at it for months, because you'll get fantastic dividends at the end of the day. Look at 5 years for the largest Indian mining company. He's paid off for 10 times of the share as dividend alone.
Interesting. So I've heard it said, Ajay, that anything that comes out of the earth is something that you should look at. And your point on mining, therefore, is well taken. The other question that I have is on coal, though, because from India's perspective, there's one thing that has emerged from this supply chain issue, particularly on energy, is the need to have alternatives. And if coal gasification, etc., has to come through, is there an opportunity to play that in India?
You touched a raw nerve. You're at a raw nerve. We knew about coal gasification 5 to 10 years back. Well, look at where India is, look at where China is. And there is no choice but to do coal gasification. We should value coal because that's our lifeline. Problem is not the coal. Problem is there's only PSU company which does coal. And if you ever travel to the coal mine, which I did long back, you see the amount of wastefulness and the bureaucracy and the lethargy in their system. You go to their office, you will feel miserable to just enter the office only. Forget even going to the mines and the conditions. Problem with coal in India is that it's a great place to be, except it's a PSU entity, unfortunately, and which has not been the most efficient entity for decades at this point in time. Wastefulness, theft, labor problems, cost escalation, you name the malady, it hits there. So it's a great place, but how do you invest in a PSU, which is absolutely inefficient company?
So if you're not playing coal directly, is there an alternative or somewhere along that supply chain possible to play in that energy transition? And I know that this is a theme, Ajay, that everybody's spoken about, but are there still opportunities that you see?
If you were coming into the earnings cycle today, you have no chance but to look, you can't look back and say, listen, I've lost all opportunity. There will be always opportunities. Power sector, I still believe it. We are invested heavily. It represents the greatest opportunity in India for the next 10 to 20 years. And for the simple reason, whatever we do, AI, no matter who uses it or does not use it, or even your laptops, the power consumption is going to go up dramatically. You can't set up power plants, overnight. We've done good job with renewables. We've done good job with thermal. And therefore, at the end, and there are only 4 or 5 companies at the end of the day, so it's not such a 20 companies competing like cement. So you got to be patient. That's the whole game, is about being patient with power industry. In 3 years' time, you'll get a very healthy return. And the good part, let me tell you the good part. There are enough ETFs available for power sector to invest in. So you don't have to take company risk at this point of time. You can take just a sector risk, go for the ETF and invest there and hold there and be there. In domestic economy, I think power represents the one place after stock exchanges which kind of give you the perfect place to be there and run with the economy. Good or bad can happen in the Gulf, or at the end of the day, oil prices go up. You need more of thermal power generation in this country. So I think it's a good place, safe place. Diversify your risk. Don't be company specific. Go to the ETF, buy it, and go to sleep.
Okay. Interesting thoughts there. Ajay, the other piece is what's happening to pharma and chemicals. Selectively, some people believe that selectively, some of the chemical names might be turning after 4 or 5 years of a hiatus. And we've seen some blockbuster numbers by CDMO companies. Newland today, Laurus the other day, I think Piramal, if I'm not wrong, also delivered, or maybe they're yet to, but I think the last quarter was decent. What's happening in this cohort of stocks? Do you think they are worth researching and investing at all?
Well, I own them, so I'm biased.
Okay.
Yeah, the answer is yes for the 2 reasons. I think one reason the answer is simple is rupee dollar. All these CDMO companies, and I'm excluding pure chemical companies. I'm talking of really the contract development and manufacturing on the pharma side. Not even the agrochem too much, because agrochem has its own set of issues, so let's leave it aside. Just focus on the pharma. I think it's a great place because one, the rupee is giving you the benefit straight away. A 2-year forward cover today is over 100 rupees a dollar. So, you don't do anything at the end of the day. You got a 6% upside sitting right there in just the exchange rate. The second part is that these are, you shouldn't get carried away by buying these companies at this point of valuation, because these have got the thing called lumping. Okay. You see Laurus, you see anybody, you saw 2 bad years of performance. When the capacity gets built up, it takes 3 years for product validation, and then you see the uplift. So these are not like a generic consumer company where you'll see natural quarter by quarter movement and all. So good industry. India is very strong in CDMO. Science is good. Our exports are very good. Let me tell you, our plants are A quality. You got to be there, but you got to be again patient with these and if you want to invest 100 in CDMO, only start with 20. You will get bad quarters and chances to buy these shares. If you look at Newland, you just mentioned, it had a disastrous last few quarters and you saw the share price. You will always get opportunity to buy these companies in a bad quarter, and they will have a bad quarter. Let me tell you, not because they do badly, but once a product goes for approval, then it takes 3 years for the next big order to come with the same product. So your factory could be even idle for 1.5 years. So it's not the company is bad, it's the nature of the beast of the business. But you got to be patient, steadily keep buying 2, 3, 4 companies and build a portfolio in CDMO. If you represent in India, apart from auto, CDMO represents the biggest opportunity India has in the global markets for export. And I think government will do or should do much more than that. So you got to be there, my friend. It's the best place India has. If India has a chance to do anything great in the world, it's a CDMO.
All right, on that very optimistic note, Ajay, thanks so much for taking the time. Always
You're
a
welcome.
pleasure.
Have a good day.
Absolutely, I will. Thank you so much. All right, let's talk about the markets. And it seems like it's a little wobbly, and understandably so. We've once again slipped into the red. That initial uptick has been sold into the benchmark, now testing 23,300 on the downside. The broader markets, let's pull those up. They're looking relatively better. Just about holding out in the green for the mid-cap index. The small-cap index trading with gains of about 0.2% or so. Let's look at the breadth, because you've got about a half an hour that is panned out, and let's look at where the breadth is. It's closed just a tad, but the advances and the decline is now narrowing the gap between them. And, we might as well take a look at the sector picture as well, whether that picture has changed, because there was a fair bit of green on the screen at the start of trade, but then you've seen quite a few stocks and sectors that have now dropped into the red. So, for example, the PSU banking index was just about flat at the start. It's now trading with cuts of about 1%. You have auto that's down about 0.6%. You have the Nifty Bank as well that's losing as much as 0.5% or thereabouts. Metal holding out with gains though. Let's talk about an interesting stock. We've got CMPDIL, which is in focus as a Coal India entity. And the focus is, of course, shifting to its FY27 growth roadmap, which includes the margin recovery plans and the efforts to diversify beyond Coal India. We've got the management joining in to speak about the numbers. Before that, let's go across to Sharad to speak about the context. Sharad?
Well, yes, the company has recently listed, and of course, they're having a high revenue dependency on Coal India. That's roughly almost 67 to 70 odd percent, and they provide support services on the entire spectrum of coal and mineral exploration. Now, of course, they are having a 61% market share also in this mining consultancy, and they are backed by Coal India, and it's a mini Ratna part 1 as well. Apart from that, first 2 weeks ago, the numbers also came and they were showing a good strength, especially on the top line front. And recently from its IPO numbers also, if you look at the stock is up 35%, and recently the rally was there for the month, in the last 1 month, the stock is up 18 odd percent.
Mr. Chaudhary Shivraj Singh, who's the Sharad, thank you for that, of course. Mr. Chaudhary Shivraj Singh, who's the CMD of CMPDIL, joins in right now. Sir, thanks so much for taking the time out. And at the outset, I'd just like to maybe ask you about how you see the broader year gone by, because strong growth for sure in FY26. Is that the sign of what could happen in the year to come or the years to come?
So this we have been telling during the roadshows and previous interviews also, that CMPDI has lot of opportunities ahead upcoming, not only because of the expansion in coal production and exploration services that are required, but also beyond coal and beyond mining. So all those opportunities that are upcoming before us provide a strong momentum for our growth. And whatever growth we achieved last year, we are very confident to better it. So this year we will be able to achieve what we have been promising in previous interviews.
Sir, sorry. So just trying to get that straight. I mean, your exit run rate is an 87 or a significantly high revenue growth bump up. You are saying what you did in FY26 over FY25 in percentage terms, you'll do better than that in percentage terms in FY27 or FY26?
Yes, so the overall year growth in revenue was a little over 10%, and this year we are very much confident of making it 15%. So that kind of revenue growth we will be able to see.
And okay, and what is the flow through to the bottom line as well?
So bottom line, as we have been telling, that it will be similar to what we have been achieving in past 3 years. So bottom line will also be growing. In fact, our bottom line grows better than our revenue. Exception was the Q4 of the last year because of increase in expenses that came for one time in Q4 for employee benefits.
Sir, the dependency on Coal India, understandably, because of the size of the entity and the importance of it, is quite considerable, 67% at this juncture. Is there a plan to reduce that dependency? How will that take place, and what is the trajectory that you anticipate this will follow?
So first of all, we are a subsidiary company of Coal India. So of course, the Coal India job is with us. And coal sector is the largest one among the minerals in India. So that is why the highest work is in coal for CMPDI. But at the same time, as we had promised that we will be diversifying more into other sectors, not only minerals, which includes RE and critical minerals. We are also diversifying into solar and as well as beyond the mining sector and in fact beyond geographies. That was our promise, and we are working diligently to keep that promise.
Sir, maybe we spoke about this briefly, but I would like if you can give us some details, because I think everybody is trying to figure out where is it that each country will get its own ownership of rare earths and other key minerals. Now, you are in the pole position to be able to opine on that. I'd love for you to tell us in detail, sir. One, as a business opportunity for you two, but two, as an opportunity for the nation. Where are we on that path? Because we hear sporadic announcements of some companies, 1 or 2 or 3 companies, are trying to make some forwards on the rare earth piece, but nothing material, if you will, at least in the public eye.
So even if you see the reports from US Geological Department, other countries, India is supposed to have 5th largest rare earth reserves. And rare earth has now been opened, and in fact, this current allocation of rare earth blocks. So there is a lot of opportunity in rare earths for India. Somehow the exploration has got delayed, and now it's coming up as a major activity. So rare earth potential is there, and of course, government has identified institutions for processing technology development also, and CMPDI is partnering with these institutions. So we have a good opportunity in rare earths for CMPDI as well as for the country.
And how large is this relative to what has already happened, sir? I mean, let's say in FY26, if we have taken baby steps, do we materially expand that rare earth mining, identifying mining, exploring opportunity in FY27, or is it still going to be a slow start?
No, this year, in fact, it will be more, and more blocks will be coming up. So we will be taking part in all these auctions also. So this is going to be a good start that we made previous year, and we will build upon that, and it will be a great start again in this year.
Mr. Singh, just a couple of questions to understand this. You mentioned that it's believed that India has the 5th largest store of rare earth. The problem, as we understand it, is the ability to process it. So you talked about partnering with entities that will process this. Now, expected that you would have to set up capacity for this to take place, right? So what would the timelines be for those capacities to be set up? If you can give us a sense of how quickly this will be ramped up, and what will your revenue sources be from that and the trajectory thereof?
So as far as CMPDI's revenues are concerned, these are coming from the exploration services and the mining technology. As far as processing is concerned, done MOUs with and they have developed centers of excellences in some of the institutions already identified by government for development of processing technology. And we, as the R&D institution of Coal India and Ministry of Coal, we are taking up those projects with these centers. So processing technology development may take some time, but of course we are on the job. The centers are working day and night for the development of this technology.
It would help
by
to...
the time exploration and mining is completed, I think we are confident that some technology development should happen.
Sir, it would just help a little bit if you define, if not exactly, but give us a range of what some time would entail. Are we talking about months, or are we talking about years now? Are we talking about 2 or 3 years? Can it be done before 2030?
So I think that 2030 target will be good because it cannot be done in months. The exploration itself takes more than 2 to 3 years time. So by the time we complete exploration in these blocks and mining is done, it will take about 5 years to mine out these things. By that time, we should develop that processing technology.
Okay. Would you anticipate, sir, one last question from mine at least, would you anticipate that that's the nature of growth for your business over the course of the next few years, if you will, that you grow in 10, 12, 15% kind of a range, that's low, steady, great rate of growth? Or could there be a J curve some point of time?
No, we already promised that we will be growing by 15%, 15%, in fact, 15 to 20% in next 5 years. So that is our target, and we are working very diligently to keep that promise.
Are you saying that you have said that you will grow 15 to 20% CAGR, compounded annual growth rate, over the next 5 years?
So CHER will be 15% if we take from previous year, and there will be, in fact, some moments towards 2030 that we will achieve 20% growth.
All right. Mr. Singh, exciting time, certainly. Thanks so much for taking the time. Pleasure speaking with you, and wish you all the best to achieve those targets.
Thank you very much.
All right, let's turn back to earnings. And Dr. Reddy's Laboratories is seeing a little bit of a volatile day in trade. Contrary to expectations, it has actually opened in the green, and it's more or less holding or treading water at this point. Let's talk about those earnings. Let's head across to Varsha and then bring you a slice of the chat that we had with the management. Varsha?
Well, thank you so much for that. Overall, yes, a weak set of numbers was expected for Dr. Reddy's, and this is because of the Revlimid, the sharp fall in the US business, and of course the multiple one-offs, and margins also saw a big hit. India, emerging markets, and Europe continue to grow strongly. Now, the Revlimid price correction plus one-time shelf stock adjustment had a hit of around 453 crore. Even CAR-T and other R&D discontinuation led to impairment charges. New labor code impact and one-offs also impacted margins. The margin impact that you're seeing was due to mix change, pricing pressure, and one-offs. Now, onto the segmental story. Well, global generics was down 13%. North America sales were down 51%. Emerging markets was strong, though Europe was also strong. And they're also exiting some R&D programs. The focus has been shifting to complex generics, biosimilars, and consumer healthcare. And the strong push is also on the branded business in India and emerging markets. Overall, a weak set of numbers, but again, the company is expecting double-digit growth when it comes to ex-Revlimid revenue, and they are expecting to have that 25% margin back in FY27. And semaglutide and biosimilars are the next leg of growth for the company, and hence maybe the market is pegging on that. But I did speak with MV Ramana, the CEO of Global Generics at Dr. Reddy's, on what were the key drag beyond Revlimid which has caused the revenue decline that we are seeing. Do listen to that chat. There was a revenue decline year on year, and Street was expecting this. But beyond Revlimid, what are the biggest factors behind the weaker than expected top line, if you could help us with?
Yeah, sure. So we had, apart from the lower sales of lenalidomide, we have had a one-time impact of shelf stock adjustment. We've also had an impact in terms of one time on the VAT of one of our markets, and an adjustment for eptilagemod, which did not pass the trial successfully. So these are, let's say, one-time events that have impacted the Q4.
Right, got that point. Also, the US business, has historically been a key growth driver, but pricing pressure and competition are clearly intensifying. Are you now, seeing what I would say the structural revenue pressure in base generics, or are we entering in another tougher pricing cycle when it comes to US generics?
So in terms of the price erosion in the US, it has been constant. But if you do look into the growth that we see in Dr. Reddy's, and even if you look into from a point of Q4, you see that Europe, India, and emerging markets have demonstrated a healthy double-digit growth. And when it comes to the US that you spoke about, we've already started to launch new products in Q4. And at the same time, we have a good number of product launches that we are scheduled to launch this particular year. So aspiration, of course, is to continue to grow the base business double digit in FY27. While we continue to grow the base business, we are building the capabilities in order to deliver on peptides, in biosimilars, in innovation, as well as consumer health.
Right. And sir, there was a pressure in margins as well. Now, while there were one-offs, investor would still worry about the magnitude of decline that, we have seen. How should one look at the underlying, margin trajectory from here, say, maybe FY27 or FY28? How is EBITDA margin looking like?
So if you see the Q4, the shelf stock adjustment did take the margin below, but without that adjustment, we would be at about 48%. But our aspiration would be to be in the place that we were, between 50 to 55%. You would see that the new product launches across all of the markets, the growth of the branded business, both India, emerging markets, and the consumer health, will continue to ensure that we are in that range as far as the margins are concerned.
Right. And sir, if you could also, highlight on the EBITDA margin, if you could, help us with that ballpark range that you're expecting.
And what you would see on the EBITDA margin, that the base business profitability is hovering around 20%. And then when you add products like semaglutide, or when you bring in additional BD opportunities, aspiration is to get to the 25% mark. So we have consciously worked on the base business EBITDA, both through the productivity measures to looking at our costs, but at the same time also growing the base business across multiple markets. And as a consequence to that, the base business profitability is around the ballpark of 20%. And whatever we will do with the special products and BD should help us to do better and to be around the 25% mark.
Got that point. Also, sir, the discontinuation of CAR-T related program, is a significant strategic decision that you have taken. I mean, what change? Was it economics or competition intensity or execution complexity? Because, why I'm asking this is because, investors often value Dr. Reddy's for, balancing generics with innovation bets. Now, after the CAR-T exit, how should one think about the company's innovation roadmap going ahead?
Sure. So innovation is a very key part of the Dr. Reddy's strategy. And today, both in India and emerging markets, we have several products that we've already launched and several that are in the pipeline, either in the form of getting the clinical and the regulatory approval or in the process of getting into the market. So innovation is core. And as we had spoken earlier, in the therapeutic areas, our aspiration is to bring in the future standard of care while we continue to offer the current standard of care. For us, CAR-T was about prioritization of where we spend our R&D, and looking into the timelines, it was more a prioritization call. But in terms of our journey on innovation, this will continue, and we will bring in more new products, not only in FY27, but for the years to come.
Understood. And so, inventory levels and working capital have also increased during the year. Was this driven by supply chain preparedness for upcoming launches, including GLP-1?
Yes. So this was to prepare ourselves for the major launches. We have several launches that we have lined up, both in the US, in Europe, as well as in emerging markets. And we were also kind of preparing ourselves with some of what you see in the Middle East in order to ensure that we provide our products across all our markets. So this is, in that sense, a temporary increase, but otherwise for the rest of the year, we expect this to be well within the control.
Right. And so now, the major erosion is largely behind. Now, what replaces, Revlimid or lenalidomide as the next profit engine?
So if you see, there are two ways to look into this. One, of course, is on the new products. There are two kinds of new products. One would be the special products like semaglutide or abatacept, and other is a regular set of new products, and we have quite a good number of launches that are coming up in US, Europe, as well as in emerging market. The second, of course, is the inorganic opportunities that we will seek to bring in more new growth into the organization. So I think it will be a combination of both that would help us to get the new product engine delivered to our top line and bottom line.
Right. Speaking of SEMA and GLP-1 opportunity, how big can this become for your company maybe in the next 2 to 3 years? What is the revenue contribution that you're expecting from GLP-1 products?
So if you take the GLP-1, if you take the SEMA, today we have launched in India. Very soon we would be launching in Canada, and we have filed this product across many markets. And as and when we get the approval, post the patent expiries in those countries, we expect to launch the product. So GLP, if you see, as far as emerging markets are concerned, the three kinds of markets. There are markets in which there has been supplies of the GLP-1. There are markets in which there has been partial supplies, not to the full potential of the country. And there are many countries in which there has been no supplies as far as the GLP-1 is concerned. So we expect to serve all the three markets. And both in 27 and 28, as the markets open up, you would see that the product of Dr. Reddy's would be available in those markets.
Right. And so also, talking about the biosimilars, can this structurally improve margin profile versus the current base business? Why I'm asking this is because a lot of companies are actually entering into biosimilars, and, it is kind of becoming a crowded market as well. Just wanted to understand your outlook when it comes to this segment.
So there are two ways to look at biosimilars. One is the fact that Dr. Reddy's has got the front end and the market access, both in emerging markets, in 45 emerging markets, Europe, as well as in the US. So we become a source or a partner for companies who don't have the front end to partner the product with us. And second is when you look into the portfolio of products, you will have certain products which are really large ones, which many companies would try to get into that segment. But there are also products like abatacept, which is relatively less amount of competition. So it would be about how you develop the portfolio in which you have a certain set of products which are less in terms of competition. Not only you work with your own portfolio, but we work with partner portfolio and leverage the front-end capability that we have across many, many markets.
Right. And so, lastly, now, what is the real growth rate X one-offs that you are building for FY27? I don't want the exact number, of course, but any, ballpark range if you could help us with.
So, aspiration, of course, as I said, in spite of the fact that we would not have the Lina, we would be able to grow the base business in double digits.
Well, that's Dr. Reddy's, arguably one of the stocks of the morning. A bit of a surprise, really, for a lot of people as to how that stock is done, because people anticipated the stock could start about 4 to 5% lower. It hasn't given that opportunity at all. Okay, before we take that break, let's talk about what mutual funds have done in the month of April. It's gone by. We are on 13th of May, but it would help to try and understand what is it that mutual funds did in the month of April from a sectoral perspective, as well as from a perspective of what they did with individual names. So let's get those graphics up on the screen and show you what the template was. So the allocation in capital goods increased the most to about 8.8%. This is the highest in number of months, by the way, that MFs have done. And in terms of the other sectors which have done, wherein there has been a bit of an increase in allocation, capital market companies and NBFCs. There were some numbers here. I think some 33 basis points and 56 basis points. I mean, that's what happened in terms of the uptick in those sectors. Okay, we move to the declines. Let's talk about that. The allocation declined in IT to 8.3%, followed by private banks. But private banks, the allocation may have gone down, but still there was fair degree of capital that flowed into those private banks as well. This is mutual funds as an entire basket, right? Now, what did they do in April in terms of large cap stocks? By value, the top stocks that were bought, ICICI Bank, SBI, and Eternal. So that is one set of names. And what is it that saw some exits? Reliance, Wipro, even Bajaj Auto, very interestingly. So you've been wondering why Reliance has been getting hammered. I think one of the reasons is that. On terms of buying the mid-cap space, Poonawalla saw fair degree of buying, United Spirits saw fair degree of buying, and interestingly, ITC Hotels saw fair degree of buying in the month of April in terms of allocation that was allotted. What saw exits? GE Vernova TND, Persistent Systems, and M&M Financial. As you can see, both in the large cap and the mid cap space, there is an IT name. What about small caps? The most resilient cohort, if you will. The buys by value were IGL, Delivery, and Angel One. No surprise that capital marketplace came into being there, and Angel One especially because it delivered a fairly robust set of numbers. What saw exits is Manappuram Finance, Vardhaman Textiles, and JB Chemicals. Now remember viewers, this is the overall buying that mutual funds did. In some of these, if there was selling done by FIs, then the stock may not have rallied. But at least now you know where is it that the domestic institutions have made the most purchases or most sales in the month of April. This data, of course, is courtesy Daulat Capital. They put out a research note, and I have borrowed some aspects of that note to give you this perspective.
Very interesting, Neeraj, and some of those names certainly stand out. Of course, at individual mutual fund levels also, there have been some interesting updates. We saw yesterday, of course, when the fact sheet of Parag Parikh Flexi Cap Fund came out, that they have deployed incrementally some cash, so they're down to about 15% non-equity. But remember that they have 4% in REITs as well, so it's not all pure equity. It's quite interesting to look at, right? They have increased, for example, in ITC, in Bajaj Holdings, and a couple of IT companies, including Infi and TCS. We have to step into a very quick break. We'll be back on the other side with markets and a lot more. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the story.
All right, welcome back. You're watching India Market Open, and it's been a choppy sort of a day for the equity markets. We're just about hovering around that 23,400 mark, and I wonder whether that changes over the course of the day. For now, though, you have the broader markets that are holding out. In fact, they're at pretty much the high point of the day, if I look at it. No, actually, they've lost a little from the high point of the day, but they've rebounded from the low point, certainly. We got Vikas Prasad, who's a portfolio manager, Asian Equities M&G Investments joining us on this leg of the show. Vikas, thanks so much for taking the time. Good morning to you from where we're at. What would you say, and it's been a little while since we spoke to you last, so the question that I have for you is, do you see a situation where fundamentals have shifted and you've had to adjust your expectations for FY27 when you think about corporate earnings? Because other people have adjusted them lower and some are pegging it at the single digit or high single digit growth in FY27.
Hi, good morning. It's good to be back. A lot to talk about. Yes, in the short term, I think we necessarily need to, in aggregate, reduce our earnings expectations. But what has been encouraging is the dispersion that we've seen in the markets, opening up opportunities for stock pickers. But also, we have seen accelerated growth, especially in the small and mid-cap space, among the names that we've been looking at, in some of the defense names, in some of the precision manufacturing companies, in diagnostics and healthcare services, where we are overweight still. But we have seen some causes for optimism in some of the BPOs. Those names have gotten hammered in Q1. IT services and FMCG are a different story. Perhaps we can talk about those later. But it remains a stock picker's market for long-term investors. And that is what is exciting for us about India today.
Okay. So I want to delve a little deeper into a few of these pockets. And Neeraj will come into maybe some more stocks that I might not touch on. But BFSI as a cohort, IT as a cohort, these have seen significant selling pressure, not just because of fundamentals, but also because of the kind of FI ownership and the fact that these are large liquid stocks that have been hammered and sold into because the view on the country as a whole has shifted. Is there an opportunity, or do you think that you would give it a pass for now, wait till things settle at the fundamental level?
Well, to that group, to that pair, I would also add FMCG, large liquid, not as well owned by foreign institutional investors, but also these are not the same companies. They don't have the same growth profiles that they did once upon a time. Now, to return to the banks, we are more lightly positioned in private banks than we have been in over a decade, since 2013, actually. And BFCs we've added over the past few months. And in IT, heading into earnings season, we'd actually reduced our holdings further. We've been underweight for almost 2 years. We were underweight heading into earnings season. I saw no reason during the most recent earnings season to increase our holdings there or to reduce those underweights. And so our positioning there is lighter. As you mentioned, FIIs hold these names. In absolute terms, the growth profiles are different, but also relative. India is a very different market from when the private banks used to be the leaders in the market and the IT services as well. This is nearly 7,000 listed companies now. We spoke about this earlier, that India might not have the Mag 7, but it has the Mag 7,000. So that's very fertile grounds for long-term active investors, and there are so many choices. It's no accident that from the March lows, we have seen such a strong bounce back in the small and mid-cap space. The pace might not be sustainable, but the direction we feel is.
You're hunting in the broader markets, but I want to ask you specifically about the private banks, because you mentioned that you're at the lightest in quite a while. I'm wondering why that is, because some might argue that if the interest rate cycle has bottomed and there is an expectation and people penciling in the possibility of 2 rate cuts going forward of 50 basis points, then one can argue that the net interest margins might have bottomed out and could head northwards, and the valuations are not challenging.
Valuations are not challenging. They have fallen. Same thing for the IT services sector, but that's a different situation. On the private bank side, well, if we start with financials more broadly, NBFCs, we own more of those now. We have taken some profits there also year to date, but we own more of those now than we have in the past. And if we look beyond the large private banks, we see better alternatives. The public sector banks, also, we have some exposure there. Given some of the earnings, we're not surprised by how those names have traded. But on the private sector banks, it's an absolute call. The growth profile has changed. While the credit sector, the system credit is healthy, the names might have bottomed, as you mentioned, but it's also a relative call. We're seeing better opportunities elsewhere, healthcare being one of them. Healthcare broadly defined, domestic pharma, dialysis, hospitals, healthcare services. So that's the exposure that we might have had 3 or 5 years ago in the financial sector has moved to healthcare and precision manufacturing and defense, and then some. And I don't see that changing in the near term.
Because you're a great perspective on this sitting where you are, and that's why I'd love to know. Every update from a large language model company, be it OpenAI 2 days ago, or for that matter, or day before yesterday, or Anthropic as it has done consistently, leads people to believe that there's one more death knell in the IT services space portfolio. Companies that we speak to, IT companies that we speak to, naturally so, but say that an acquisition, a small acquisition here or there, or an announcement doesn't kill the IT services business model, because that will stay. You need IT services to deploy AI across businesses, and banks, healthcare, etc. are not going to go the AI way at the drop of the hat. Is the market too pessimistic on the prospects of IT service companies, or is this a realistic reaction to that cohort?
Well, there's a few things to unpack there. One is, I've been investing in these companies since Y2K. And one thing we should give them credit for is over the past quarter century, they have reinvented themselves again and again. They have come back as the leading companies do. And in this space, they have done the same thing. I do think that the pressures on the businesses now in aggregate, now there's some dispersion because there are so many listed companies and they're not a monolith. There are many different kinds of businesses within what we call IT services. There will be some winners that emerge, some companies that do incorporate or adapt to these changes better than others. And it's not that we are zero weight all the names. We do have some exposure. It's the net exposure that I'm referring to where we're underweight. But I think these headwinds are very, very real. I don't think the cost structures also are suited for this new generative AI token agentic world that we are in. And over the next, let's say, 6 to 8 quarters, I think it'll be difficult for these companies to adapt, which is why you see, despite earnings that were slightly in line, slightly better or slightly worse, depending on the company, relative to expectations, you've seen a continued derating because the market is still waiting to see how the sector adapts and which companies adapt better than others. Dividend yields are mid-single digits for some of these companies. We're seeing PE multiples that we haven't seen in over a decade, and they still continue to compress. So again, it's an absolute call. The growth profiles are different for these companies. They will remain different, but also a relative call as well. There's so many options in India now, and amidst the dislocations we've seen post EU-India trade deal, US-India trade deal, the budget, the war in West Asia, we see a lot of opportunities for long-term investors. Also, if you put it into the regional context, year to date, in dollar terms, Korea has outperformed India by 100%. Taiwan has outperformed by 60%. Japan has outperformed by 40%. These moves continue to widen, but they're not sustainable. The drivers that made India the best performing market in the world for a quarter century remain largely intact. We'll get through this, the current stresses on the market, and then India should resume its double-digit earnings CAGR in aggregate. And then you have some sectors that will do better than that, and many companies that will do better than that yet still.
Okay. The other aspect is because that a few people are saying that some of the product companies which are in the right space could actually do well. So healthcare product tech companies, banking product tech companies, and there are multiple examples, smaller ones at that, but they've got a huge or a huge sense of experience into how to deliver these, and they will use AI to their advantage, and there the growth might be strong. Could that happen even if the broader IT space were to kind of meander along?
That's fair, and I'm glad you brought that up again, because I didn't address your earlier point about this explosion of AI usage over the next few years and calling from even more IT services in pockets. But that's still small. If you look at the AI revenue, and each of the companies in India will define it differently. If you look at what they call their AI revenue, it's still small as a percentage. It might be growing rapidly. But again, you have the same problem that in aggregate, the revenue base is challenged, the cost structure is challenging, and so you should see continued pressure on profit growth for the next couple of years, perhaps. And that's what's getting factored into the valuations. Now, company specifics, yes, we are seeing increased AI adoption. It's not broad-based yet, but if you start with what the hyperscalers are doing, and
5 companies in aggregate might spend $1 trillion next year. That number 2 years ago was $250 billion. There will be a payoff on that at some point. There will be winners that emerge. And India is not necessarily going to be a net loser in all this in perpetuity. There will be winners that emerge from India as well, in the software space and in the hardware space.
Interesting. Vikas, if globally the commodity players are going to be watched out for very closely, I'm wondering whether you think the metal pack in India is something to focus in on, because you've seen, for example, for the ferrous players, already price increases that have been taken, and any increases on the raw material side, on the cost side, are being passed on very quickly. Do you see opportunities in the metal pack in India?
We do. We have exposure here. Now, we have high hurdles for sustainability. We pay very close attention to companies' carbon footprints, and as you know, the sector is very carbon intensive. So our universe might be a little bit smaller than that of a domestic investor. But yes, your logic holds. It's sound. Over the past month and a half or so, we have increased our holdings in this space where we can. And given the disruptions that we're seeing, it's plausible that the rallies here continue.
So if you were to splice that further, and I understand the restrictions that you might have based on your models, etc., but would you be more favorable towards growth in ferrous or non-ferrous? And if you delve deeper into non-ferrous as well, what are the factors that you see panning out?
Well, we have exposure to both, and I think the outlook is positive on our time horizon for both, given the disruptions that we're seeing across the region and the ability. So one of the issues that is important is the ability to pass through costs. And when we look at sectors where we're still seeing that ability, this is one of them, both in the ferrous and non-ferrous. And so for the names in which we can have exposure, we do have exposure, and we have grown that.
Okay, because the other question is, at least my final question to you today, what is it that you will absolutely avoid in the Indian market?
Well, it's hard to say in aggregate. I would say where we started, the large cap FMCG names still struggling, IT services names in aggregate still struggling, and in private banks we're holding fire for the most part. We've not gone very aggressive there. So I think the capital that we would have allocated to those names, we have shifted elsewhere. Healthcare is easier, more opportunities there. Defense, precision manufacturing, auto components, a lot of excitement there. And then, of course, it's very stock specific. If you look over the past month and a half, you would be surprised at some of the names that have rallied. Some of it might have been because they had been so beaten up from the September 2024 levels, and there might be some bouncing back. But so many opportunities in India for an investor with a long-term horizon. I think if you stay away from the largest caps and you do your homework and you bet right and sit tight and you wait for a few years, the absolute returns from here should be pretty healthy in India.
All right. And I look forward to speaking to you about that, hopefully when that starts playing out, Vikas. Thanks so much for taking the time. Pleasure having you.
Always a pleasure. Thank you.
All right, let's talk about the markets. Seeing gains of about 0.25%, but really the interesting talking points are from the internals of the benchmark, because you see that Asian Paints is trading very close to the high point of the day. Perhaps a tailwind coming through on account of Berger Paints results as well, because that stock is up and about 4.3%, top gain on the Nifty 50. Cipla ahead of numbers is trading with gains of close to 3%. Hindalco from the metal pack is doing well. The pair of Adani companies in the Nifty 50, Adani Ports and Adani Enterprises, both trading with gains of about 2.5%. And lo and behold, Dr. Reddy's Laboratories trading with gains of 2%. It just goes to show that Mr. Market knows best. When you thought that it was a little bit of a weak quarter for Dr. Reddy's Laboratories, the focus more than anything else is going to be on the outlook for FY27, which is looking reasonably good. But let's keep the focus on earnings, and we've got a practically entire research team joining in to tell you about what's lined up ahead. Let's start, in fact, with Somit Sarkar, because Bharti Airtel is something that we're watching out for. Somit?
Well, a muted quarter is what is expected from Bharti Airtel in the fourth quarter. Now, if you look at the revenue, EBITDA and net EBITDA, and they're expected to be up anywhere between 1 to 3% Margins are expected to come in at close to 58.1%, while the net profit number would be 16% higher on a sequential basis. Now, the key numbers that one should watch out for when Bharti Airtel reports, it's the India mobile business. Their EBITDA and revenue are expected to be up just 1%. Subscriber base is expected to come in at close to 37.2 crore as against 36.9 crore in the previous quarter, while the ARPU, that is expected to be largely flat. Now, ARPU is largely flat on a sequential basis, also because in the fourth quarter we had 2 less number of days as compared to the third quarter, and that's the reason the ARPU number is flat. But overall, it's a subdued quarter for the India mobile business, the enterprise business, and also the DTH business. It's the mobile broadband segment, only home broadband segment, that will see a strong growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, Airtel Africa has already reported its numbers, and it was a strong set of numbers, and Bharti Airtel owns close to 62.7% stake in Airtel Africa. So some positive rub-off effect of that could come into the consolidated books. Apart from that, the key things to watch out for from the earnings would be how, or the announcement that will be coming in on how they're looking to reorganize their shareholding in the Africa business. Apart from that, what are their plans for tariff hikes? What is the capital expenditure outlay for FY27? Would be the key things to watch out for from Bharti Airtel numbers.
Okay, and once we're done with all of these earnings previews, we're going to have our researchers tell us who they think is going to be the best performer of the three. Let's go across to Cipla first and talk about what Varsha is looking forward to. Cipla is doing well, Varsha, ahead in the numbers.
Yeah, I think Cipla is exactly behaving like Dr. Reddy's, I would say, because over here, Cipla is expected to give a, weak set of numbers. This is, of course, because of the, no Revlimid sales or sales, and number two, their Lenrotide products, which will have an impact because of the import alert in the partner's facility, which manufactures, Lenrotide for Cipla. Now, onto the numbers, revenue is expected to be flat. EBITDA may fall 28%. EBITDA margin expected at 16.5% versus 23% last year, and net profit is expected to fall 41%. Now, the profit and margins are likely to see a sharp decline. Of course, US business pressure is a key drag despite healthy India growth. The key US products, Revlimid and Lenrotide, will have minimal contribution, and high base in the US last year makes the decline look sharper. Unfavorable product mix, of course, will hurt margins for the company. The US sales is expected to fall at $136 million, which is down 19% sequentially, and high value product absence will hit margins for the company. EBITDA margin expected to fall sharply year on year, and brokerages are expecting margin decline of around 820 basis points. Now, lastly, also on the cost pressures, high marketing spend, then freight cost and rising operating costs will have an impact also. And India business is expected to have a good growth, while domestic business is expected to grow 12% year on year, which will support by your pick, which is again Cipla's product, and India continues to offset the part of US revenues.
So Somit is already bowed out because I don't think that he thinks that Bharti Airtel is going to win from the three. So let's see what you and Puneet have to say. Puneet, Tata Motors CV, a few tailwinds were playing out in Q4. Is it set to reflect in the numbers?
Well, most certainly, I think, I've got the edge here because we've already seen the volume numbers come in for Tata Motors CV. It's a 23% growth that the volumes have grown, and it's expecting to show a high teen revenue growth of almost 24,000 crores expected for this quarter. EBITDA will also rise to 13.5% as well, with the net profit expected at 1,985 crores. So in terms of the volume picture as well as the four numbers, looks set to have a strong results, Tata Motors CV. Now, what we've seen essentially is that there have been some costs which have been impacting the company. So volumes, as I mentioned, has been the key growth driver. LCV category has grown well post GST rate cut, so there's a benefit there. But Q3 had a 1,500 crore one-time impact because of labor cost, integration of Iveco, which was the $4 billion acquisition. So you could see some cost element, a one-time element, which is very difficult to predict, could come into this quarter, but expecting on the numbers, EBITDA margins will grow. Just watch out for the one-time integration cost of Iveco. That could be just one of the spoil sports, but overall, expecting a strong set of numbers and hence probably the winner amongst the three.
Okay. Okay, winner among the three. Varsha, you don't have anything else to say to that, right? No, she's not yet. She's already bowed out. Okay, so Puneet is clearly the winner. All right, thanks so much for that, Puneet. Well, Neeraj, that brings us to the end of India Market Open. It's been interesting. I wonder if we hold through with the gains that we're seeing on the screen.
Yeah, it should be very, very interesting and important days for the world economy and world markets as well, as Trump and Xi Jinping meet up. So I think we'll get you a lot of perspective on that too. For now though, we wrap it up on India Market Open. Stay tuned though. Ask Profit takes forward the action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome. You're watching NDTV Profit. The stock that we're putting spotlight on the back of earnings is V-Guard. Now, it's been a good quarter for the company. Strong growth in electronics business. There were inventory gains in electricals as well. Largely, the beat was driven by these two segments. Consumer durable, however, was weak on account of weak demand. Now, to understand as to what's shaped up for FY26 and what the outlook looks like for FY27. We are now joined by Mr. Ramchandran, who is the Director and Chief Operating Officer of V-Guard, joining us now. Mr. Ramchandran, thank you so much, first of all, sir, for taking out the time. My first question to you is that this quarter was largely driven by electronics as well as the electrical segment. Just want to get a sense that consumer durable was something that lagged on account of weak demand. According to you, how is FY27 now shaping up in terms of segment? How do you expect the shift to be like in terms of the mix?
Good morning. And coming to the specific questions that you've been focusing on, fundamentally, the impact of weak summer has been felt primarily in the electronic segment through the underperformance of stabilizer through last financial year, although Q4 did show strong recovery. As far as the consumer durable segment is concerned, mainly, we are impacted here in fans and air coolers, right, where there has been a significant drag, both for the full year, though some relative recovery has been observed in Q4. So that's primarily impacted us. The consumer durable segment has underperformed relative to the other two segments, mainly driven by the underperformance in these two categories, even though there is a recovery over same period last year in Q4. Going forward into next financial year, I think it's fundamentally going to be driven by three factors. I think the summer, and how it shapes up. South has responded well thus far. South is 50% of our, nearly 50% of our revenue. And although there have been intermittent showers and, the onset of summer has been interrupted from time to time. However, at an aggregate level, summer has performed well. When it comes to non-South, I think, March and, even April, summer has been muted, particularly in North and East. And starting May, we are starting to see the signs of the impact of summer and recovery in demand arising out of that. I think at an aggregate level, that being said, given that last year's summer was bad, we should be able to do a decent job as far as the current financial year is concerned, even notwithstanding a strong summer. So that's the background on these categories. I think the impact of that on fan and air cooler will continue to, be challenging, till the recovery is fully observed.
Fair. So then, Mr. Ramchandran, your guidance with regards to a 15% growth in FY27, where around 10 to 12% will come from volume growth, is still sustainable considering that consumer durable margins are still weak. How is the margin guidance that you have internally kind of penciled in for FY27?
So I think the volume growth we are expecting to sustain into next financial year. I think as far as the value growth is concerned, 2/3 of the input cost increase has already been transmitted into market. I think almost 70% transmission has happened by end of April, and the remaining price transmission should happen in the rest of the year. I think the underperformance, in terms of margin, has been more, in respect of EBITDA rather than in respect of gross margin, because gross margins have held out even last year. Because of weak revenues in some of the summer categories, the EBITDA performance has been impacted as there has been a shortfall in throughput.
All right, so that was, of course, the management of V-Guard. Let's try to pull the stock up and see as to what it's doing in trade right now as we speak. There you go, just a 0.4% of an uptick is what we're seeing. But let's start taking your stock-related questions, as this is Ask Profit. And before we start doing that, a quick check on how the markets are panning at the moment. Let's try to pull up the Nifty 50 and see as to where it's trading at right now. The Nifty 50 is up by about 0.4%. Just a range-bound trade is what we are seeing of about 87 odd points. The Bank Nifty also up by about 0.4% in tandem with the Nifty 50 in that 53,700 odd levels. Let's try to pull up the heat map as well of the Nifty 50 and see as to how things are looking like there in terms of where stock-specific action goes. You have Asian Paints topping that chart, of course. And, this is probably on account of a sentimental move that's coming from Berger Paints, because Berger Paints did post a strong Q4 growth in terms of, and largely led by price hikes, of course. A 4% move on Asian Paints, followed by Hindalco, Tata Steel, as well as BEL. Both Adani Twins also doing fairly well. Adani Ports as well as Adani Enterprises up 2%. JSW Steel, Kotak Mahindra Bank are some of the other, top movers. On the flip side, you have Power Grid, which is down 2.4%. NTPC down 1.4%. This is one of the stock where mutual fund also sold a lot in the month of April. Eicher Motors, Bajaj Auto, Titan are some of the names that are also down in trade today. Let's try to pull up the broader end of spectrum, the mid cap 150 and the small cap 250 as well. and see as to what that is indicating in terms of where the broader markets go. The mid-cap 150 is up by about 0.8% and the small cap 250 is also up by about 0.8%, slightly doing better than the benchmarks. Quickly, the BSE 500 before we move on to our guests. The BSE 500 largely very stock specific in terms of where either number goes or news flow goes with regards to what the government has said today in terms of duty hike for gold, and on the back of that we're seeing downtick in counters like Kalyan Jewellers. But on the flip side you have Embassy Developers up 9.3%, IIFL Finance of course on the development of that dispute being settled up 9% as well. SAIL, Mishra Dhatu, Burjit Paints are some of the names that are doing fairly well. So that's with regards to of course where the markets go, but let's start taking all your stock related questions. And on this side of the show we're joined by Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher Capital, and Girish Sodani, co-founder at Ensure Capital, joining us now. Welcome to both of you, and a very good morning to the both of you. The first question that we have today is coming in from Charan, who is writing us from Bengaluru, asking about Keynes Tech. Wants to know if it's the perfect time to buy the stock or not. If I'm not wrong, today is the earnings, right? So I know, I mean, every technical trader says that, just taking a position before the corporate action is not a very wise thing to do. But so I'll take a fundamental view then from you, Girish. What's the view on Keynes Tech?
So for the longer period of time, yes, Keynes is a strong build-ups company as a manufacturing as well as the electronical designs, and going to be expanded in the next 2 to 3 years down the line. But for the shorter periods, obviously, it's not very much advisable. Looking out for the currently as the numbers are going to be released today. So just looking out for the at least one or two quarters numbers, then I think the strength will be more beneficial. Apart from that, it's a basically a very low debt company. So obviously, it's a good sign for them. But the high betas as well as the executions are not very much cleared out. So I'm not very much favor for the longer period of time as of me.
Got that view, Girish, and welcome to the show. Most certainly that they need 1,700 crores of revenues in the Q4, which will be a lifetime high if they do in one specific quarter to meet their FY26 guidance. So you saw a 6% downtick on the stock yesterday. Continues to be one that we are monitoring very closely today as well. But the next question coming in now, it's on Lumax Industries. Murli from Bangalore. He's bought it at 1,651, another high-flying stock here. And he bought it at such attractive levels. I think he must have bought it at least a couple of years ago. Murli, if you get a chance, do give us a call. We'll love to know what you saw in the counter at that time. And he wants to a 12 to 15 month view. Girish, what would you recommend? Just giving also the buying price at such attractive levels, would you just recommend him to hold on, ride the wave?
I think the client can be hold this particular counter. As the revenue growth, we are just expecting by the some around 20 to 22% CAGR. And the operations margins also going to be leveraged by the 10% upsides. So can hold this particular counter.
Okay, all right. So that's the view coming in on Lumax. The next one that we have is on Trent. Gaurav from Bengaluru says that he wants to know the right entry price for Trent from a short-term technical view. Vaishali, a very good morning to you. Your view on Trent on the charts?
So I would say Trent has corrected, and right now it is on a good support level. But seeing the market conditions, I would say keep a strict stop loss of 3,800, and if market stabilizes for some time, we can see this bounce going towards 4,300 to 4,400.
The next caller now dialing in from Chennai actually, and Kunal has a stock query for us. Kunal, very good morning. Welcome to Ask Profit. What's your query?
Good morning. So I'd like to know if it's a good time to enter Airtel for a medium to short-term view, given that we have the results coming up today.
Right.
Thank you.
Got it. Well, Vaishali, again, the key pertinent question always, would you trade a stock on the result day? Firstly, give us your view on that, and as well as a medium-term view, if you can, on Bharti Airtel.
So I would say, first of all, we never play results, but purely on technical terms, Bharti Airtel has a good support band of 1760, 1740. So right now market is a bit vulnerable. So if you are breaking levels, then this support also can be defied, and we can see this going towards 1650 levels. So long term is advisable to start accumulating between the range that I have mentioned.
Okay, all right, so that's the view coming in on Bharti Airtel. The next one that we have is coming in on Vari Energies. Our viewer wants to know if he or she can go ahead and accumulate this at the current levels. Vaishali, I'll stick with you for this one. Your view on Vari?
So I would say Vari also has done pretty well all these days. And right now we have seen a good retracement, and it's on a cluster of support of 3100. So I would say that if this level breaks, then go towards 2800. So currently are at make break levels.
Got that view, Vaishali. But the next question coming in from Balwant Modi from Rajkot, and he's holding on to, he wants to actually know an entry price of Anantraj for the long term. What would you recommend? Is this a good time to enter, Girish? Girish, am I audible to you?
Yeah.
On Anantraj, do you have a view for the long term?
Yes, for the longer term period of time, obviously it's a stronger view. The revenue growth, what we are expecting by the 50% plus CAGR, almost the companies into the restructuring of the debt as well as the profitability numbers also, the margins also, improvisations. So for the longer period, yes, but I don't think so that's the right levels the investor has to be entered. The right level is somewhere around 425 to 450 levels if we get the opportunity to just enter that particularly. But the view is completely based on the 1.5 year or 2 year time.
Okay. All right, okay, so that's the view coming on Anantraj. The next one that we have is on Kalyan Jewellers. Tushar from Jaipur is writing in. He says he's holding 500 shares at the current market price. Wants to know whether he can continue to hold, sell considering the hike in import duties. Okay, Girish, I'll take up your view on this one, on the entire pack in fact, and of course a specific view on Kalyan Jewellers as well. The government today has rolled back the import duty hike. In July 24, they had said that they've reduced the basic custom duty and cess, but now it's increased back to almost 15%, combining both basic custom duty as well as cess. How do you think this will impact jewelry companies in the medium term, and of course your specific view on Kalyan Jewellers?
So for the jewelry segments, obviously it's directly impacted for the medium terms. To the basically the short terms, we are just seeing these type of pressures in the next few sessions itself. Like next 8 to 10 days, maybe there will be the pressure in the jewelry segments itself. But for the longer period, obviously there's a huge demand in the jewelry segment, and we are looking out for the next festival season as well as some wedding seasons also coming soon. So I don't think so that this completely a bad impact in these particular jewelry counters. But if someone wants to enter in this particular counter, in this particular sector itself, has to be go into the very installment basis. Like if you talk about the jewelry segment in the Kalyan Jewellers itself, like take an example for the Kalyan Jewellers first. So the revenues are strongly upsides. So we are looking out for the some around 40% annual CAGR. The PAT also improvised by 75 to 80%. Earning EPS also very strong. And the profit margins are improvisations from 2.9 to 3.8%. So overall, the fundamentals looks very strongly. But because of these particular news, the complete jewelry segment has been getting beaten. So if you talk about the Kalyan Jewellers, yes, I'm looking out very prospectively for the next 2 to 3 years down the line. But you have to go into the installment basis like a 40-30 type of concepts and enter in the jewelry segment.
Okay, all right. Okay, that's the view coming in on Kalyan Jewellers as well as the impact of this import duty hike. We've got our next caller. I think Murli is calling us from Hyderabad. Murli, a very good morning to you. What's your query about?
Yeah, good morning. This is regarding the Shriji Shipping, which I am holding it since the IPO allotment. 58 shares at the rate of 252.
Okay.
So I wanted to know, for a long term, is it good to hold on for another couple of 6 months to 1 year?
Okay, because your outlook is for the next 6 months to 1 year, Murli, I'll try to get Vaishali's view on this one, because it's a fairly small company, right? Around 6,900 crore of market cap. Vaishali, this company is into basically logistics that focuses on, dry bulk cargo. But with regards to where charts go, any view?
Yeah, sure. So actually, overall, shipping stocks have been doing very well. And to talk about Shriji Shipping, I think this is in a very good, strong uptrend. So I would say continue holding with a trailing stop loss of 400 rupees. And I think in all likelihood, this can go towards even 500 plus. So in my opinion, this is a buy and dip. 400 is the support. The view gets a bit corrective if 400 levels break, then it would slip to 370. In spite of that, it would still be a positive. Negative view is only below 370.
Well, it is, let's pull up Sagility actually at this point of time. The company reported a decent set of numbers with the guidance also, and I think that's what's driving the momentum on the stock price today as well. We have Srinivas Matapalli joining in. He is the Group Chief Financial Officer at Sagility. Srinivas, very good morning to you. Thanks so much for joining in. It's Puneet this side. Just to start us off, very quickly on what we've seen, that it's been a very strong year for you overall. You had that big acquisition also that's propelled the growth numbers. But barring that, a 15% constant currency growth for FY26 isn't bad at a time where we've seen the volatility. What gives you the confidence of a low to mid-teen growth guidance that you've given for FY27? Is that some kind of order book number that you can give us that shows you the resilience, at least in this volatile time, to continue that kind of growth?
Thanks. I hope you can hear me clearly.
Yes, most certainly. Please go ahead.
No, we are particularly proud of how we have performed in this year. 15% organic and overall 29% including inorganic, I think was a particularly good year. Our order books continues to be strong. Our underlying, propellers for revenue, I think continues to be strong. We have been given a guidance for low to mid, low mid digits growth for the current, FY27. And as I said, all the growth propellers, whether it's outsourcing demand in the health care industry, the requirement for payer cost optimization, all of that remain intact. And I think delivering to this, given our order book of about 570 million, not order book, sorry, our pipeline of about 570 million, I think gives us confidence to be able to deliver to those numbers.
Also, Srinivas, what we've seen, and since you are such healthcare focused, in the US, what has been the current conversations on the ground? Because we spoke post Q3 as well, and just a certain couple of issues that you had highlighted at that time, you had expected them to get solved by Q4. As of now, do you feel that the buoyancy still continues to be there? And with AI, you mentioned that the impact is about 2%. It's slightly higher than what you'd guided earlier of 1 to 1.5%. So how should we look at the AI aspect for Sagility at this point of time? When you quantify that 2% impact, is it that you have to deliver those AI services now and you're not able to charge the client for those services, given that it's a base need for those clients right now, and maybe it's a big opportunity in the future, but right now you see that impact?
No, I think first of all, I need to say that AI for us continues to be an enabler rather than a threat. So I think embedding AI in our operations, helping us drive more effectiveness or efficiency from a customer perspective, I think continues to be the way we look at it. The 1.5 to 2% is what we potentially feel is an impact on revenues. But as I said again, the overall outsourcing, potential and the requirement for cost optimization for the payers continues to be very strong. And as I said, that 1.5 to 2% is factored in our growth guidance of low mid digits.
Srinivas, because what we've seen this year as a whole, and just taking a step back, is that your clients more than 20 million has increased by from 7 to 9 odd. You've also seen some increase in the 5 to 20 bracket as well. What are those additions largely clients which were in the lower bracket which have now been upgraded and you're more catering to them, or is these new client acquisitions and you expect them to continue in the next year as well?
We continue to focus on adding new clients, especially from the mid-market segment. And I think our acquisition in BroadPath has helped us increase the overall numbers to about 82 now. We serve about 81, 82 clients overall. So these are all new additions. We have added about 17 clients in the current year. The net client growth is about 10. So yes, we do continue to add clients. And, any new client that comes in obviously comes in with a smaller number, and we continue to expose them to our capabilities and grow them over the life cycle. So that's the way we penetrate new clients.
Just one last question, Srinivas, because, of paucity of time, we've seen that, you're generating a lot of cash as well, and that a certain amount has gone into their acquisition, as you spoke about for this year. But for the next year, you've been able to generate that 1,000 crore odd cash in FY25 as well as in FY26. And of course, a lot of it has gone into investments as well. Just some perspective of where do you see this number in FY27? Are you still open to acquisitions? And is this something that you will continue to do in the near term?
Absolutely. I mean, we continue to look at M&As where it fits in within our own interest, right? Either from a capability addition or new client exposures. All of that will continue to be a key focus area. So selectively, we'll continue to look at M&As and balance it with investments in AI transformation, and at the same time see what we can return to the shareholders. This year we have paid overall 15 paisa, or recommending paying about 15 paisa dividend to the clients, to the customers, and we'll continue to look at that policy going forward.
Got it. Well, Srinivas, we'll leave it at that. Thanks so much for joining and giving us time here at NDTV Profit. Of course, a longer chat warranted on Sagility as well as what's the outlook for the next year. But thank you so much for giving us time today.
Thank you for having me on the program. We continue to remain very, very confident in our growth opportunities. Thank you.
Most certainly. Thanks so much for joining in. When that was the management of Sagility, numbers slightly soft, but you can sense with what we are seeing on the stock price today, the growth guidance is something that the street likes. Cash flow generation, of course, continues to be a strong point as well. But let's get back to those stock-related queries as well. And if you haven't already, do start sending in on the numbers that are flashing on the top of the screen. The next one's coming in from Biswajit from Kolkata, and he's holding 750 shares of Ashok Leyland at 83. Now he's doubled his money essentially in this point of time, so he's in gains of almost 53,000 rupees. Asking if he can accumulate some shares now, given there's been a correction from that 200 rupees price point. What would you recommend here, Girish? Is it a good time to add Ashok Leyland now?
Yes, definitely can add that particular level itself. And if we're getting the opportunities for the downside of around 130 or 135, then also a very strong positions for the longer period of time. Obviously, he have as an average price is very low, as the investors are looking out for the longer periods. So I'm looking out for the range of around 225 to 250 for the 1 year time now.
Okay, all right. So that's the view coming in on Ashok Leyland. The next one that we have is coming in from Puneet Saxena, who's writing us from Ghaziabad, who's a name doppelganger of you, Puneet. And we always think that whenever you're not there, I think you are doing this. But today, it's proved that it's someone else. It's someone else. But so his question is specifically for you, Vaishali. He wants to know the entry price for something like a Fortis Healthcare for the next 3 odd months. He's at least looking at a 5% appreciation. If not Fortis, then Tata Motors Commercial Vehicle or Bharti Airtel. Any of these where 5% appreciation is possible in the next 3 months on the charts?
So I think Fortis is one of the stocks which we too like, and I think this is a good stock of keeping 3 months as horizon. I think one should buy now or also at a dip, say 920, 900 level is the support level, because what we are looking at, first trading target resistance comes at around 1000 levels, and if it sustains above that, you can look for a target of 1020, 1030. So that's the way I'm looking at this stock, and the trend is strong in spite of all the choppiness that the market is witnessing right now.
Got it. Well, it's time now for the rapid fire round in this edition of Ask Profit. Girish as well as Vaishali, keep your answers as short as possible so that we can take as many in the next few minutes. The first question is coming from Geena. She wants to know if Infosys is a good buy at the current price. Girish, would you venture in post the correction?
Yes, can invest in for the longer, at least 2 to 3 quarters should be there.
Okay, all right. So that's the view on Infosys. The next one that we have. Sorry, you're saying something, Girish?
No.
Okay, all right. The next one that we have is from Sachin, who's writing us from Uttarakhand. He wants to know about Good Luck India with regards to where charts go, if this is a good buy from a short-term perspective. He says he has around 1 lakh of money to kind of trade with, and he's talking about 2 counters, in fact, Good Luck India as well as Bharat Rope Wires. Vaishali, any view?
So good luck is definitely in a strong trend. I would say keep 1250 as a support level and buy the stock because once this gets into new round of momentum, you can look at a target of 1450. And the other one you asked me is?
Bharat Rope Wires. Small company comparatively. If you can try to pull the chart up for Bharat Rope Wires and see as to how it's done in trade. Vaishali, if you're able to locate the chart, any view?
Yeah, sure. So I think this too is in a trend. 220 axis. Oh, Bharat Root. Sorry, I don't have this.
Bharat Wire. That's trading around 234.
So Bharat Wire, I do have it. 220 is the support. Already in a trend. If this support is sustained, then 260, 280 would be the next step.
Okay.
Right, the next question, the rapid fire round now on Sterlite Tech, bought at 194 by Raghuram. He's in great profits. Should he continue to hold? Girish, a view on Sterlite Tech, if you can hear me?
Yeah. So, as of now, looking out for the Sterlite, there would be the some around 435 would be the strong resistance level.
Okay.
And if the particularly levels will be crossed, I am looking out for the some around 500 to 525 levels.
Got it.
For the fundamental perspectives.
Okay, the next one that we have is on Havells India. Long-term perspective on this one. Our viewer wants to hold it for more than a year. Girish?
So if client is particularly hold for this particular counter, so I'm looking out for perspectivity for the 1.5 year timeline, but the fetch allocations is not advisable.
Okay. Is Kalyan Jewellers a good pick, Girish, for the next 3 years is what Siju is asking?
Yes, it's a good pick.
Okay, KC International bought at the levels of 720, 250 shares is what Kumar is holding from Ahmedabad. Vaishali, on the charts?
Average out.
Is it a good time to average into Wonderla Holidays? Our viewers holding shares at 800. Girish, what's the 1 to 2 year view?
So Wonderla Holidays, I am not looking out because as per the geographical tensions, I am not looking out for the very favorable for the hospitality as well as the tourist sectors.
Got it.
TVS Motors, good time to enter today from a long-term perspective. Earnings are to be announced today, of course, but Girish, your view?
Yes, can enter in this particular counter for the longer period.
Got it. PG Electroplast bought at 551. What's a good? Is it a good time to buy the dip, Vaishali?
PG Electro?
Yes. Stocks trading at just sub 500
okay,
now.
yes. Support stop loss 480. Buy with a stop loss 480.
Okay. The next one is from Adil Singh. He wants to know 2 stocks in the healthcare and the pharma space where you can go ahead and invest from a long-term perspective. Girish, any view?
So for the healthcare sectors, I'm looking out for the Lupin would be there, obviously. Apart from that, Marks and Pharma, there's a 2 stocks what we are looking out for the longer period.
Okay.
Got it. SBI for a short term, would you recommend, Vaishali, if it's a good time to venture into the stock?
No. Avoid for now. Wait for 920.
920. Got it. Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. Viewers, but we'll continue all your stock related queries after this very short break, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are tuning in, we're not getting a lot of callers, so do pick up that phone and call us on the number that's flashing on your screen up there. You can ask your queries live, and of course also WhatsApp us on the number that will be flashing in a bit up there. There you go, that's the number. And that's exactly what Sachin has done from Uttarakhand. In fact, we've taken his question. That's exactly what our viewer Pranav has done. He's asking about Tanla platforms, which he's bought at an average price of 539. He wants to know the target price for this one, whether to hold or sell. The stock is currently down by about 0.15%. Vaishali, on the charts for Tanla platform?
I think it is showing some signs of revival. It's just a regular retracement. 480 should be the support, and if it moves above 580, it's back on track.
All right. Well, the next question coming in now. This one, it's on Havels, and our viewer actually is holding shares at 700 rupees. So he's bought it a very, very long time ago. Now sitting just a tad below 1200. Now Havels has actually underperformed over the last 5 years. So if you look since 2021, stock's given zero returns for investors. And he wants to know if it's a good time to move to Sirma SGS at this point of time, given the momentum. Girish, would you recommend that at this point of time? Because Sirma has also run up quite a bit. What's your view?
So I don't think so. Sirma is the good bet to just shuffle from the Havels. Obviously, Havels have their pressures. And soon we are looking out for the next 1.5 or 2 quarters. There will be the pressures for the all electronic companies because of the US and Iran issues. So I'm thinking that avoid Havels and just move to any of the pharma company. That would be the better ones and the hedging propositions too.
Okay. All right. The next one that we have is on Swiggy. Our viewer Chetan from Dubai is writing in asking whether he can continue to buy more, sell it. What should be the right thing to do for Swiggy right now? He's holding around 200 shares at the levels of 455 that he'd bought in September 25. Vaishali, your view on the charts for Swiggy, what should he do?
Well, it is in a downward trend. Only thing it is that it's in deep oversold. So continue holding now for the stop loss of 240. But I'm not asking to buy for now.
All right. Well, the next question now coming in. This one is on Indian Bank actually, and wants to know if it's a good buy in the short term. This is Dilip asking this question. Vaishali, would you recommend that?
Not so, because it's in a downward trend.
Okay. Another question now. This one's on recent listings. Central Mine Planning and Design Institute, of course, one of the subsidiaries of Coal India, which got listed. The results were largely decent, and if you didn't, you can catch the management. They were on India Market Open today. VV Chandran is actually holding 80 shares of the company at the IPO price and asking if it's a good time to book profits now, or should he continue to hold? Girish, what would you recommend on this counter?
I think it's a listed company, and just as of now, what I am looking at the financial performance. The performance was decent once the profit of the operations or margins or revenues are going to be good, but the PAT is basically a declining. So as the fundamentals look out, the heavy pressures from the international markets is going on. I don't think so. This is a good bet for the holding perspectives. You can book your profit as of now.
The view coming in on CMPDIL. The next one that we have is coming in, and this is on Sula Vineyards. Our viewer, Dr. LVK Raju from Hyderabad, is asking about this counter from a long-term perspective. He's been holding 500 shares at an average price of 312. Now sitting on a loss of almost 47%, so 73,000, over 73,000 loss is what he's sitting at. Wants to know what he should do. Girish, I think in the last 1 year, the stock has not done anything fundamentally and rather has gone down. And I'm not sure if, FY27, it is a possibility that it could turn into losses as well. But your view overall on the chart, overall on the stock as to what should Mr. Raju do? Can he continue to hold, book his losses? What should he do?
If the perspective is not more than 5 years or 7 years down the lines, I think there should be a book losses. The reason behind is a multiple ones. As we talk about the solar vineyards, there's a two verticals they are looking out. One is the wine, and apart from that, there's a resorts as well as a hospitality business. Both are not working very strongly. Recently, we saw that the revenues growth are still there, but that is not very much sufficient to just put a stock price would be somewhere around 300 to 350 down there. So if the view is not more than 5 years down, so I think they should be book the losses and shift to the another strong counter.
Pawan from Bangalore is asking us a question on Pharma now, and he's been trying to get in touch with us. So thanks so much for sending in your query, Pawan. He's holding 100 shares at around 169 and wants to know what the long-term perspectives is for the next 2 to 3 years. Girish, would you recommend him to continue holding this counter for the long term?
Yes, for the pharma, as well as we talk about the pharma, the strong build-ups as well as the profitability numbers are very strong. The quarter four, as well as looking out for the financial year 2027-28, we are looking out somewhere around the growth number would be 18 to 19% revenue CAGRs. And the contacts, what were biotech fundings, high-tech growth propositions, and the drug consolidations are still there. So we are looking out something that would be hold for the at least 2 to 3 years down the line. The perspective is very, very strong.
So that's the view on Pharma. The next one that we have is on Dr. Lalpath. This is from Ashish, who wants to know the short-term perspective on this one and when should he go ahead and enter. Probably wait for some time, or this is the right time. Vaishali, on the charts?
On the charts, you can enter with 1550 as stop loss and look for a target of 1660.
The next question coming in now, it's on LG Electronics. Bhairav actually has bought into the shares at 1480 and he wants to know a 1 year perspective of LG Electronics. Girish, the summer season was slightly more delayed and you've seen that impact on the AC stocks as well. LG has borne the brunt too. Would you recommend him to continue holding? Is the valuation favorable?
So if we talk about for the shorter period, yes, the valuation is very much comfortable. But when we are talk about for the longer perspective of time, obviously there will be a strong bend would be from the margin funds. As we talk about for the completely based on to the electronically for the multiplications from the Iran and US war should be there. Apart from that, there the heavy crude costs will be also impacted to all the electronic companies. So not very much favorable for the next 1.5 year or 2 year down the line. Let's see how the margins are going to be realized for the next 2 quarters.
Okay, the next one that is on Akam Drugs. Satyan, by the way, is writing this question. Satyan is asking about 2 stocks, but I'll only take one. Satyan, you know the rule. He's bought Akam Drugs at the levels of 555 and he's bought it seeing the charts. Wants to know whether he can continue to hold this and what should be the target and stop loss for this one. Vaishali, your view on the charts? It's up 2.5%.
Yes, so continue holding, keep today's low as stop loss and look for 570 as target.
The next question is from Rajesh Maheshwari and he's asking on a very interesting pick, Dixon Tech. Now stocks reacting on results. Results weren't the greatest. They've also spoken very heavily and we've discussed in the opening show today about how the company missed out on the industrial EMS part and Atul Lal himself spoke about it and we played out that bite this morning where they could have done that in the last couple of years. But the markets, wants to believe into Dixon's, potential over the next few years to get into it and have the manufacturing expertise. Now he's bought shares at 9550. That's of course the fundamental view. But Vaishali, on the charts, is this a good entry point now after almost a 45% correction from the highs? We've seen the stock languish at these levels now. Is it a good time to enter?
I would say so. Actually, the stock is showing signs of revival and 9550 even technically is a good support line. So the stock gets weak only below that. So right now, I think it's the right time to add.
Okay, all right. So that's the view coming in on Dixon. In fact, Mr. LVK Raju was on call with us, but Mr. Raju, I think we've already addressed your query that you did send us on WhatsApp. So I hope you heard that. The next one is on HCL Tech. Harsha from Vijayawada, Andhra Pradesh has bought 60 shares at the levels of 1500 from a short-term perspective. Continue to hold, Vaishali?
I would say avoid IT right now. Exit.
Got it. That's just a straight one-line answer from
Exit.
Vaishali. Exit. IT is not something to look at. Got that view, Vaishali.
But that's how it has been like. Even if you take the mutual fund flows in the last month, that is April, the sentiment is not very positive when it comes to IT stocks. In the large cap, mid cap and small cap space, you have counters like Infosys, Wipro, Persistent Systems, which have seen consistent selling. So I think it's the right advice. Probably.
And we've seen all these stocks hit a 52-week low yesterday as well. Infosys, TCS, but very interestingly, we spoke to Sagility today, and since they are only focused on the healthcare bit, there seems to be a consensus that could be a segment where the niche players are looking to outperform and could outperform in the near term as well. But that's the view on tech. KSB Limited is the other counter that Krishna Kant wants to know. He's holding shares at 1,010. So he's currently sitting on a loss. Vaishali asking what's the target in the near term? Can his buying price come back of around the 1,000 odd rupees?
Right now it is in the corrective mode, so I would say final support lies at 800. So continue holding with 800 as support, and once we see new round of momentum setting in, perhaps it can go higher. But right now it is definitely in a corrective mode.
Okay, all right. The next one that we have is coming in from Amrut, who's writing us from Kushal Nagar. He wants to know if he can add Shriram Finance at this time. He's not mentioned whether he's looking at a short-term perspective or a long-term perspective, but seems like he's a long-term investor. So, Girish, your view on Shriram Finance? It's currently trading at 920. It's come off from, of course, its 52-week highs.
Yes, can hold for the longer period of times, as the AUMs are going to be equalized dividends, as well as the net profit also will to be prospectivity for the longer period of times. The credit as well as the numbers. Apart from that, the fixed deposits also going to be improvised by that 15 to 18% annual CAGR. And they are just going to be expanded for the rural, like Tier 2 and Tier 3 cities expandively. So for the high prospectivity, yes, it would be the very strong candidate for the longer period.
Well, Deepak from Bangalore is holding on to BHEL and Nestle. And his question being, is the bull run over? Should he exit or hold on? Now, Girish, we've actually seen decent numbers from Nestle. We've seen the management change as well. Either of the stocks that you like right now for the long term?
No, again, for the longer period of time, the FMCGs, I'm looking out betterly for that would be the Dabur one, not the Nestle ones. As we looking out, the Nestle should be the strong candidates, but for the margin pressures, I think there will be the heavy pressures going to be reflected for the next 2 to 3 quarters itself. So for the Nestle, I am looking out for the next, looking out for the few quarters to just advise for any of the client for the longer period. The Dabur is the more prospectivity. The revenue growths, we talk about the double-digit growths we are looking out for the next financial year 27-28. The margin expansions also there, as well as they are just going to be expanded for the next new home and personal care product lines. So for the longer period, I'm looking out the Dabur is a good candidate.
Okay, all right, interesting. Vaishali, just your view quickly on Nestle, because I'm guessing the charts could be suggesting otherwise. Some consolidation is what we've seen the past day, but great up move is what we've seen since probably 6th of April.
I would say, the trend is really positive. So I would say continue holding and keep a trading stop loss of 1400 if trading is the strategy. But I think in long term, this can go to 1700, 1800.
Got that view, Vaishali. The next one is from Shankar from Bangalore. He wants to know if Jyoti Labs is a good counter to enter. Now, he wants to buy 500 shares. Girish, we actually saw a very negative reaction since that partnership on Henkel and Prill won't be renewed after almost 15 years of working together. So that part of the business, very high margin EBITDA business. So would you just recommend Shankar to pursue some other opportunity compared to Jyoti Labs?
Yes, obviously, I think the collaborations are not yet finalized, and we are looking out little bit cautious in the terms for the growth perspective. The margin pressures is also there in both of the flagship product lines, that is the Ujala Supremes. So for the these type of perspectives, I think that the pharma will be the better options to just shift it to the another one, Blueprint or the Mars.
Okay, all right. The next one that we have is on sale. Vishwanatha Reddy from Andhra Pradesh says that he's accumulated sales since 2005. So he did it in 2005, 2012 and 2019 also, I believe. And his average price is around 58 rupees. Wow, that's interesting because the stock is currently trading at 192. So he's sitting on significant profits. What should he do now? Hold or sell? Girish, what's the view on this one? The stock is up almost 9% today.
Again, the heavy congratulations to this particular investor. What the level he is a center and just hold this particular counter. But for the sale, obviously, I'm looking out that there would be the strong upside still waiting. And just looking out for the infrastructure as well as the railway pipelines, we are looking out that the steel companies are going to be strong upside for the next 1.5 year, 2 years down. So just hold this particular counter for the strong upside.
Sales been very interesting as well. Hit a low of almost 68 in 2022 around June, and been up 3x from those levels as well. So continue to monitor sale. The next one's actually coming in on Lloyd's Enterprises as well. Rajiv is holding shares at 69. Vaishali is holding 5,000 shares of this counter. Would you recommend him a 6-month view?
I would say so because this counter too is in a good uptrend, and I think looking at the longer term projections, this can go towards 85 to 100 levels. So in my opinion, continue holding.
Okay, all right. So the next one that we have is coming in on MobiKwik. Our viewer Peter wants to know if you can go ahead and invest into this counter from a 2-year perspective. Girish, your view on this one? The stock is currently trading around 3% lower.
So for the longer period of times, just a second now. So it's a MobiKwik. Yes.
Yes.
Okay. So the revenues is almost a flat as of now. Just looking out, the profitability numbers should be there. But for the longer period of time, I think the margin should be improvisations by the 14% to 15% year-on-year judge. NBFC is also just looking out for the new license are also there will be the game changers for the financial year 27 and 28. For the longer period, yes, the client can be held for the 2-year to 3-year down the line perspectives.
Well, the next question that's coming in is on Tilak Nagar Industries, and Rajkumar from Bengaluru is holding on to these shares at 490. Now he wants to know a long-term view. Girish, stock's up still 45%, but he might have bought it at the highs. Should he average down? What's your view on the stock, the valuations?
So the valuations looking out the perspective, see the PE ratios are a little bit higher in the Tilak Nagar Industries. The profitability numbers are also looking out the balance numbers out there. So for the longer period of times, obviously the perspectivities looking out somewhere around 410 to 415 would be the strong digits where the client can do an average. For the right perspectivities, if you particularly hold this counter, then just hold it for the 500 to 550 levels for the 1.5 year.
The next question is from Sai Karthik from Dallas, and got that view as well on from Girish, but he wants to know a good level for Reliance Power. Now, it's been a very thinly traded stock. Vaishali, he's holding 12,000 shares at 22.5. So, would you recommend him any view here, or just avoid this counter and pursue some other opportunities?
Well, so I would say purely on technical terms, this is showing some strength. 25 is the support, and it can go towards 35. But if I were to pick, I would definitely go for a Tata Power or Torrent Power or any of the transmission stocks. So my comfort would be on good fundamentals, and I think, yes, that's my choice.
Okay, the next one is also for you, Vaishali. This is on Kim's Hospital. We've got Rajiv Sahu from Goa who's asking a 6-month view on the charts for this one. What is your recommendation?
So full hospital sector is doing very well, and Kim's per se is also in a good trend. So I would say continue holding even for a longer term perspective. Even on a weekly chart, it's ready for a breakout. So I think above 800, 820 levels, this would call for a target of around 1,000. So according to me, continue holding.
Got it. Well, Vaishali, just a couple of names here as well on Sirma, Ather or TTK Prestige. Shrikant from Bengaluru wants to know, for the short term, which one of these counters is looking good right now? What would you recommend?
So Ather Energy, it has shown a good run up and we continue to stay positive. So short term is not really possible right now, but I would say these are all good quality stocks. Continue holding, but my choice would be right now Sirma and Ather.
Okay, all right. The next one is on Cupid. Sushila from Bellary wants to know as to what should be the next target for her. She's bought at the levels of 127 and 2,557 shares is what she's gotten. I think yet another day of where we get a Cupid question. But Vaishali, your view on the charts for this one?
So I think observe a range of 110 to 140 as levels for now.
Well, the next question coming in now, this one, it's on from Shankar from Dubai actually. He's holding on to shares of Fino Payment. He's bought it at 220. Wants to know what he should do with this counter at the current time. Vaishali, it's been a very, very volatile counter, Fino Payment. But would you recommend a view for Shankar, what he should do with his 250 shares? Should he hold on for a little while? Is the momentum starting to pick up? Anything on the charts?
Well, my personal view would be to shift into either defense or power stocks or, pharma sector, and of course even metals. But right now, I mean, chartically, this stock has got no strength. Only thing is it's corrected quite a bit, so we can expect a bounce. So with the stop loss of 120, continue holding.
Okay, all right. The next one that we have is coming in on KSH International. Our viewer, Dr. Ashfaq, has 49 shares bought at the levels of 589. Wants a view on this one. The stock is currently trading around 1.7% higher. Vaishali, your view on the charts?
KSH International, that's what we're talking about,
yes,
right?
KSH International.
Yeah, so it is in a good strength, upward trend. I think for a broad-based view, 550 should act as a support. And if this stock crosses 680, 690, it's ready for new highs, perhaps to 720, 730. So 550 should act as a support and continue holding.
Got it. Well, Deepak from Delhi is asking a question on SBI cards and he seems to have bought it at elevated levels of 990. Let's pull up SBI cards now. Also look at the 1 and 5 year view because it'll give you perspective of SBI cards where he would have bought it, and he's asking a view on stocks languishing at 624. Do remember the IPO price was almost just 700, so it's below the IPO price also. Look at the 1 year, 5 year chart also, and has been a clear laggard in that sense for SBI cards. Let's start pulling the 1 year and the 5 year chart very quickly. Down 30% in the last year, and the long term chart also, if we can pull that up also. And has been a rank underperformer. So that high hit in 2021 of 1140 never went back to those levels yet again. Vaishali, on the charts though, is this coming now at its lowest point, what we've seen over the last few years? But is there any sort of momentum that you see? Maybe Deepak can exit at the higher levels. What's your view?
There is no sign of reversal. So I would say be smart enough to exit and get into another quality stock. So
that's the view coming in on SBI cards, but we have an exclusive story coming in. Sources tell. Okay, sorry. I think we'll just circle back to that story. While our reporter gets ready. But the next question that we have is on NBCC. Priyam from Hyderabad has bought 500 shares at the levels of 100 rupees. Wants to know if it can continue to hold or not. Vaishali, your view?
So NBCC, I think it is currently at a support level. It was doing well till a couple of days back. So I would say 90 would act as a support and the view gets further strengthened only about 100, 103. That could trigger a upside move going towards 110 or so. So for now with 90 as support, continue holding.
Got it. Well, the next actually caller from Hyderabad, and Aruna has a stock query for us. Aruna, welcome back to Ask Profit. What's your query?
Good morning, sir. I wanted to ask this query with Vaishali, ma'am.
Okay.
So I'm having Oracle Financial shares of 110 quantity at the price of 8,250. Okay. I wanted to add further. So what is the support point to add further average? Like further I wanted to add.
Got it.
If that is a good decision, or do I need to exit any coming terms? So what is the supported basis basically?
Got it, Aruna. Vaishali, I think, we've asked you, I think, at least once a week on Oracle Financial. A lot of players have invested in this and got some handsome gains. For Aruna too, she bought at 8250. What's your view on the stock now?
So I would say actually the stock is showing strength even on the weekly chart now that she has very keenly allocated money on this. I would say 8,500 is a support level. That is where one can add this stock. And even when I'm looking at the weekly chart, this stock will gain a lot of strength once it crosses 10,000 levels. And then perhaps you can look for a target of 11,500 and so on. So 8,500 would be the ideal level to consider for adding this stock.
Okay, the next one that we have is on Alchem Laboratories. Angad from Indore wants to know if we can go ahead and buy this from a medium-term perspective. Vaishali, your view on the charts?
So Alchem Lab, well, it's just consolidating, and I think overall pharma and lab stocks could do well. So 5,400 is very close stop loss, and buy this for targets of 5,700 to start with.
Okay, so that's the view coming in on Alchem Labs. But with that, we're completely out of time on this edition of Ask Profit. Vaishali as well as Girish, thank you so much for taking out the time and helping us answer all those stock-related questions. But viewers, if you have queries, you can also tune in at 2 p.m. on the second edition of Ask Profit, the afternoon edition. But for now, do stay tuned because Know Your Company is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknight.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is a very interesting show where we get you interesting companies, and right now the flavor is earnings season. So definitely we have got a company whose numbers have been very strong, but I'm not going to give you the name of the company so fast. Try to guess it. This is a Bengaluru-based kitchen solutions company, and largely if you're in South India, these products are already there in your kitchen. They benefit from the shortage of LPG in the cooking space. That means the demand of these cooking induction cookers, that is where the strength is lying, and that's why the stock was buzzing last 2 months. Very strong numbers, obvious it is. And interestingly, from the March lows, the stock has also gone up. It's gone up more than 30%, almost, because it's almost 24 to 30% right now, and doing well in trade as well. But what's the company name? I'm sure there'll be 3-4 companies which you'll try to guess, but the company in focus is Stovekraft. This is the company which we are talking about. But why the interest is there? Why are we getting this company in KYC? That's the important question to be asked. Some questions are there. Let's see what are these questions. First one is definitely going to be on a strong Q4. The electric cooktop, that demand has gone up. LPG crisis हो रहा है, electricity का requirement है. वो cookers की बात करें तो यहाँ पे cooktop में request is coming in. FY26 revenue growth was 11%. That fell short of 15%. So we'll try to understand from the management where did the overall impact happen and well it fell short. The confidence of intact of 15 to 18% revenue growth and 40 to 45% gross margins. This is the plans for the next 2 to 3 years. Will the management change this stance or will it remain the same? That's the important question to be asked. Also, the aluminium, copper and currency movements, it impacts a lot. Now, will we see that in Q1 or H1 FY27? That's the main question to be asked. That's something we'll focus on. Apart from that, the IKEA announcement, there was a partnership announcement last quarter. How are they expanding it? What will be the benefits coming in? And the incremental portion, of course. Apart from this, the expanding presence through the entry into the hob segment, that's something to look out for. And also, we'll be asking about the appliance business. Now, they want to go bit more than what the cookware segment is, and so we'll try to understand the strategy of how this product mix changes. Also, the export business, any major headwind is coming in. We know that the tariff of the US has been corrected from 50 to 15%, or is there some problems to it? But to give all the solutions, we have the management, Rajendra Gandhi, the MD and the founder of this company, Stovekraft, where he'll answer all of our queries and any concerns which is there for the investors, that will also be addressed. Also, let's look at the entire story of this company, Stovekraft, what this company is all about and what are its key products. There are some brands also to look out for. As usual, I had mentioned you earlier, it's a Bengaluru-based kitchen solutions and company calls itself Emerging Home Solutions brand. Remember, the company is moving towards the high margin segment. The home and kitchen appliances, pressure cooker, freestanding hobs and non-stick cookware. These are the key products which the company is having. Also, the two brands are there. I'm sure the Pigeon brand and Gilma brand, these are the brands of these cooking utensils and these products which might be there in your homes, and this is how the company is known as now. Also, they proposed to commence the manufacturing of the home and kitchen solutions, and this will be coming under the Black Plus Decker brand. So this is also the third brand from this house. Apart from this, looking at the numbers, the backward integration manufacturing facilities, there are two of them. One is in Baddi, one is in Bengaluru. That is something to watch out for. And also, they're having 329 stores operational in 22 states and 151 cities of India. So definitely they are expanding offline more. But let's see how the channel-wise distribution looks like. Roughly the general trade, that's almost 32% and a modern trade also having a 34%. But the company is trying for an omni-channel growth, and that's why we have e-commerce, own retail, OEMs and others as well. This is the entire picture of how they are channelizing their sales. But how the volume growth has been, that is something to look out for, and there are different sectors. The induction volume growth, of course the base was lower, but the demand which was there because of the LPG crisis, look at that number, it's around 67%. When it comes to non-stick and cooker, it is there. It's around 23 to 40 odd percent. And interestingly, the appliances, these are the smaller appliances, that has also shot up almost 98% of volume growth. But of course, some concerns are there, especially on the gas cooktops. That's where the demand is pretty less in terms of the volume growth. Apart from this, let's see the revenue breakup, how things are looking like. Small appliances, no matter it is called small, but is having the largest revenue contribution of 40% here. Apart from that, if you look at it, around 22% comes in for the pressure cookers and the remaining segments as well. But let's point out the positive triggers for you. The first one is the return ratio and working capital. They are improving. Second one is, of course, on the debt portion. The debt reduction is continuing, and that's what is aiding a good momentum to the balance sheet analysis, and we'll get you that in some time. Strong demand for electrical products, especially due to the LPG crisis, and that is where the perception of the stock has changed. But nevertheless, the revenue contribution is still not very high also. And interestingly, for last 2 years, the domestic institutions have been increasing the stake, and that is where the interest comes in. It had an IPO, there were 2-3 big high ups and lows, but after that we are seeing DI is lapping up. But there are some negative triggers also. Not everything is rosy, and that's why our job in KYC is to get you all the entire 360-degree analysis on it. The export still getting impacted on the trade issues, that's of course there. Also, the geopolitical issues may keep the pressure on the costing front. No matter how much backward integrated you are, there will be rising costs, and of course it's going to impact every one of us and all types of companies. Valuations are still remaining on the higher side. So is there any value emerging? I don't think so. I will get you those numbers to prove it. And slower growth is coming in the gas cooktop and the non-stickware segment. These are the two segments. Decently, there is 16 to 20% revenue contribution. So this is the entire picture for Stovekraft. But how do we judge a company in KYC? Let me show you the KYC ratings. There are 8 of these ratings which we track. Of course, we include income statement, balance sheet, cash flow, and also for you we get you the return ratios for this company. We will compare the ROC and the ROE numbers. यहाँ पे शेयर होल्डिंग रहेगा, FIs, DIs और प्रमोटर की स्टेक के बारे में हम बात करेंगे. And then there is street cred as well, valuations where we compare that with its peers, and there are 3-4 interesting peers where we'll try to understand whether the stock is cheap or not, and of course the outlook, what are the numbers and triggers going ahead for the company. But let's start the first rating, that's the income statement. And largely the income statement, top line growth has not been that attractive. The EBITDA numbers have increased, the 3-year CAGRs has been pretty decent, but of course the street is wanting more. Ye dil mange more. Whatever you do in business, those numbers should be reflected here, and it's not showing so much of it. However, the Q4 numbers, they have done really well, and this is where the interest came for me also to track this company and maybe try to see whether any alpha can be made for you or not. Largely the net profit, the EBITDA, this is where the jump has come in, and it has been a stable, good jump coming in their key product lines as well. Let's look at how the margin profile is also functioning, and margin profile also has gone up and it's sustaining, and that's a good portion. It's around 10 odd percent. But as and more they go into appliances, as and more they go into value added, as and more they're going to export, the margin profile changes, and hopefully this can go up to the 12 to 14% margins. But we definitely will ask this outlook. So net Q4 numbers were strong, margin is good, but if historically speaking the numbers haven't come in as yet, so I'll give a neutral rating right now, and we need to figure out more couple of quarters to judge that. Let's look at balance sheet, and I mentioned to you earlier about the fall in debt, and this is where the borrowing, it's literally not there. So that is where the strength lies. Most of the debt reduction ratios have come down, and because of that we might expect in future a little bit of rating upgrades as well. And when that rating upgrade happens, the borrowing profile changes for a company, and it sets up a very positive momentum for the stock. So net balance sheet is pretty strong, cash balance is decent, so I'll give a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's talk about cash flows. How has that improved or not? From last 2 years, we'll be getting this data. Of course, some aberrations were there in FY25, but let's see overall net currently for FY26, how things stand. Cash flow from operations has improved. The conversion which is there, that has also improved. And overall, the net cash flows, this of course includes operating, investing and financing, all of them has also improved. So net Stovekraft is doing well and on cash flows as well. So cash flows and balance sheet has been really strong. Income statement, I would say neutral right now, but let's look at the other parameters also to judge the return ratios, how things have managed. And of course, we have given you the quarterly breakup. The ROC numbers were on a decent 15%. A slight pressure has come in, and this has been coming in at around 12 to 13%, but not a major shock, to be honest. It's maintaining its trajectory, that 12 to 15% mark. Margins also, we saw that. Let's just pull up the ROE numbers to show you how things are moving. And over here also, a little bit of a minor pullback is there on the positive side for the ROE as well. Around 8.5 to 9 is the average, and it's still falling in that. But yes, from the third quarter to fourth quarter on a sequential basis, there has been an improvement in both ROC and ROE numbers. So I'm going to give this still a neutral rating when it comes to this overall analysis. Let's talk about the shareholding, how things are moving. And shareholding, the promoter stake में कुछ बदलाव आया नहीं है. 56% था मार्च 2024 में, और अभी भी देखें March 26, 56%. Now, interesting thing is FIs have not increased their stake at all. It's been flat as a pancake. But DIs, on the other hand, have been lapping 3%, 7%, now 8%. So the institutional interest is definitely there, if not FI participating. So I'm going to give this a strong thumbs up only on DIs lapping up their stake in the shareholding segment. But apart from shareholding, let's talk about street cred. Has the stock actually made money? That's the big question to be asked. At the end of the day, if the stock doesn't make money for you, then it becomes a concern. 2025 highs, the stock is still in a correction mode. It's down 29%. But from the March lows, where we saw most of the mid cap, small caps going up, and there was a rally, especially on the LPG crisis front, which was there, and the benefit immediately company getting that, and that is where company got March lows. The stock went up 24%. But if you're holding the stock for 1 year, you're sitting at a loss of 11%. And if you're holding for 5 years, there hasn't been much return, just 13%, almost you could say flattish. So yes, for medium term, long term investors, the stock has given a very big, patience exercise. But because of that, I'm going to give this a negative rating for street cred. Let's pull up the valuations to see, is there any value left? And I doubt it's going to be there. Stovekraft is on the expensive side along with TTK Prestige. One is at 46 times, one is at 51 times the 12-month trailing P. If you have the competitors, it's on the lower side. We have Hawkins Cookers and we have Butterfly Gandhimati as well. That's around 20 to 31 times. So definitely both of them are quite expensive. And Street is still concerned that the valuations are not that attractive, at least for the entry. That's what the analysts tell me. So it's a negative rating when it comes to the peer comparison. Valuations are not that attractive. But let's talk about the outlook. What is there in the outlook? First of all, the company is expecting almost a 15 to 18% growth. याद रखिए ये 2 से 3 साल वाला long term view है. Generally outlook, most of our analysis in KYC happens on long term whenever you're analyzing it. Now this aims to expand the gross margins to 40 to 45% over the next 2 to 3 years. That's something which we'll be watching out for. But of course, in short term, महंगाई भी तो है. There's a strong demand for electrical cooking. We might see that demand pushing in the second quarter or the first quarter of FY27 as well. And the expanding presence through entry into hob segment. Now, how big this segment is, what's the benefit looking like, we'll try to understand from the management, and aiming for the appliances business eventually surpassing the cookware. That's what I was explaining you on these numbers. So net, this is important outlook, but I'll still give this a neutral rating right now when it comes to Stovekraft. लेकिन आते हैं, let's explain you total KYC ratings, what's there for Stovekraft, and you should of course understand what is the reason for it. Income statement is largely neutral, even though Q4 numbers were strong. Balance sheet, the debt reduction is something which I liked. The cash flows has improved, and that is why we have given a strong thumbs up to them. Return ratios, it's been very, very plain, straight, in a very range bound, but nevertheless, it's a stable business model. Shareholding, the DIs have been lapping up, but concern definitely is the returns haven't come in for the investors for this stock. That's why I've given this a thumbs down. Valuations are still on the expensive side. if you get TTK Prestige also on this side, because these stocks have run up. Outlook, it's neutral, decent enough on the growth perspective, but yes, there are some headwinds that can definitely come in from exports, tariffs, or even the costing. That is where things are getting expensive. It's not only impacting this company, it's impacting the entire sector and a lot of other ancillary industries. But let's give the final rating for the stock. It's roughly 4.5 out of it, largely neutral number, which we give generally in the KYC segment. So definitely we'll try to understand from the company. And on the other side, we'll be speaking to Rajendra Gandhi, the Managing Director at Stovekraft. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill.
Welcome back to KYC, and we are joined in by Rajendra Gandhi, the Managing Director at Stovekraft. Good afternoon, Rajendra ji. Sharad here, and a very strong set of numbers coming in from Stovekraft. Of course, there is an angle to the electrical cooktop and the electrical related appliances demand going up. But what else led to this growth in these numbers? And do you think this demand will get pushed to in the first quarter or the second quarter also of this financial year?
Yeah, good afternoon. The last quarter was quite good on demand side, and we continue to see demand continuing both for cooking appliances and for our pressure cookers.
Right, and this demand is going to continue in the first quarter and second quarter also. जो demand चौथे तिमाही में दिखा, first and second quarter, will it get pushed?
There seems to be an change in adaptation to moving to cooking appliances, electrical cooking appliances. So either to what Indian households or kitchens were only depending on LPG gas, there are also some as a backup are adding induction cooktop and other cooking appliances like the rice cooker, air fryers, and OTGs. But we are also seeing this becoming a primary cooking appliance for many households. So we believe that with a large country like and so many households in the country, there is a huge opportunity ahead for cooking appliances.
Right, and Rajendra ji, just look at the FY26. You had guided for a 15% uptick in revenue. I calculated it comes to 11%. Have we lagged somewhere because of this?
Yeah, there was a initial period of the year. First 2 quarters, there was a lag in our export orders. It was there was a drop in export business because of disruption in tariffs, but that is now a past. We are seeing exports back to normal. With that, I think we are back on our expectations on growth. and with that added demand on electrical cooking appliances, we believe this the growth we are on the growth numbers that we anticipate to.
Right. And Rajendra ji, another question is that means that 15 to 18% revenue growth and that margin expansion to 40 to 45% over next 2 to 3 years. So this guidance, will you stick by it or you would like to change it a little bit here there?
No, we are confident of the growth. We have worked on our cost. Of course, again, the last quarter, there was one-off items like huge forex loss, there was huge volatility and the depreciation of the rupee, which led to some drop in expected margins. But we are confident of the gross margins being around 40%.
Right, and just to give a perspective, there's a backward integration at play also for most of your plants. That's where it tries to offset. But the question remains is aluminum का भाव बढ़ा है, copper का भाव बढ़ा है, currency adjustments is there. Of course, you do hedging and forex adjustments also. Any impact in the immediate term, next couple of quarters maybe?
Yeah, definitely this currency is a worrying thing. Otherwise, we have addressed the market volatility on commodities. We have passed on the cost increase in this current quarter to adjust it for our aspired margins. The volatility on forex, we are trying our best to manage it. That is the only ambiguity that we are living with. Otherwise, I think we are in control of our costs.
Right. So currency is something which everybody is looking out for. But apart from that, the IKEA partnership which was announced earlier, the street wants to know a little bit more about it. Ki by when these incremental benefits will start coming in and what will that be?
Both IKEA and Stovekraft have invested on building this capability, and now we are ready. We will start seeing revenue from this quarter.
Okay, so from first quarter onwards, we'll start seeing the revenue from IKEA as well. Okay, that's a pretty interesting, way to look at that. But apart from that, the hob segment, that is where the company is pushing hard. What is this segment? How big is this market? And what kind of a market share gain are you targeting in this hob segment?
So it's actually a chimney and hob, and either two we were importing this. We have set up our own manufacturing facility for this, and there is a very high adaptation of this chimney in every kitchen in the Indian households, and we believe that is an appliance of the current and future. We are very confident of doing well in this segment also.
Okay, but any quantification, any numbers for this?
All these new product additions or export, the growth in demand for electric appliances gives us a high optimism on our expectations to grow between that 15 to 20%.
Yeah, that 15 to 20% comes in. But there was a major, strategic outlook going ahead is now the company wants to aim for the appliances business more to eventually surpass the cookware segment. Now just explain us, and of course this might be a bit theoretical, but we need it for our audience. How different is the appliance business when you compare it with cookware business? What are the return profiles? What are the important, pros and cons? If you could just explain that to my audience.
For us, we are both channel and product agnostic on margins, irrespective of the categories that we are in. It is only divided between domestic and export business. Export business is a more of a white labeling business for us. Gross margins are a little lower than our brand business. Otherwise, between the cookware segment and the appliances segment, we are agnostic on the margins. We price our products in a way to achieve our aspired EBITDA margins. So on the margin side, these are neutral, but we are seeing good growth with more and more manufacturing, in-house manufacturing of these appliances, which were, as a country, we were more importing these appliances. Today, a majority, maybe closer to 97% of the products that we sell from the Stovekraft on our Stovekraft P&L are all manufactured within the facilities of Stovekraft. So that gives us the power to address supply chain challenges, cost challenges, and continuous innovation. All this is leading to higher growth in our cooking appliances. Now that the country is also adopting more and more of cooking appliances, so this is giving us that advantage again.
All right. Also, a little bit of course, this minor technical error, but definitely the management has said a very important thing. आप अगर कंपेयर करते हैं आपके cookware business or appliance business, the margins remain same, and export is largely white labeling. Rajendra ji, on the export front only, I want a question on that. What are your export in terms of total revenue, and the tariff which is there, that impact which is there from US, how is the company taking it? If you could just explain us that.
The tariff disruption is a past. We are in line with Southeast Asian countries. We are neither having an advantage or a disadvantage on tariff. So our business is back on track. About 12% of our business used to be export, but it is growing now, growing faster than the company's growth rate. So we believe this will continue to grow now.
Right. And final thoughts, Rajendra ji, on the competition in the industry. And I'm talking about the domestic markets. Your view on that?
Like I said, the appliances business is growing, and the advantage the company has over competition is we have continuously invested on manufacturing it within our facilities. So this has given us that added advantage of being a company that manufactures and having the distribution and various distribution channels to address the consumer needs and a growing brand. All this within one company is giving us that huge advantage. We definitely have an advantage on innovation because we manufacture these products. So that is giving us advantage. There is a growth in this segment.
Right, Rajendra ji. That is a very important. I had purposely kept this question for the last to understand कि आपका company दूसरों से कितना अलग है. And that's how you have answered. Thank you, sir, to taking out your time and giving the views for the company and the outlook ahead as well. It's always a pleasure to talk with you. So very interesting management from Stovekraft, and of course, LPG crisis is there, and that's where the momentum has come in, but the stock has not rewarded the shareholders on a long-term basis. And if some positive outlook comes for FY27, maybe then alpha can be created in the current valuations for the company. For interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots.
Benchmark script a recovery with Nifty staying firmly above 23,400 level. Sensex gains more than 200 points today. Rupee hovers close to record lows. Jewelry makers trade under pressure after government hikes the import duties on gold and silver. Basic customs duty on gold and silver imports increased to 10% from 5%. Agriculture, Infrastructure and Development says on gold and silver imports raised to 5% from 1% earlier. IIFL Finance shares surged over 8% after founder Nirmal Jain clarified a 475 crore rupees income tax order. The NBFC said all tax liabilities are met, the order will be contested, and there's no material impact on financials or operations, triggering a sharp investor relief. US President Donald Trump heads to Beijing for high-stakes talks with President Xi Jinping, his first visit since 2017. Trump says there are a lot of things to discuss, adding Iran is very much under control even as trade talks narrow to limited economic deals. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take it to the numbers. HPCL revenues 1.14 lakh crore rupees, and it is slightly below what the street was expecting. Dividend of over 19 rupees per share, and the stock is adjusting to those numbers, really reacting to that. And there you can see a spike, almost 2% up in trade. HPCL's OMC is in focus. EBITDA margin at 7.8% versus an estimate of 3.3%, and this is what the street is going to really react to. Profit up over 20% at 4,900 odd crore rupees. Revenue has taken a slight dip when it comes to QOQ number for HPCL, but EBITDA numbers of 8,900 odd crore rupees is up almost 28%. So keep an eye out on the operational performance. Of course, the global volatility, oil prices are something that are really impacting the OMC space. Soumit is here to put all those numbers into perspective. Tell us, Soumit.
Well, if you look at the HPCL numbers, the big beat is what we are seeing, at least on the EBITDA front. Now, our street was expecting the EBITDA to be close to 3,335 crore, but the company has reported an EBITDA of nearly 9,000 crore rupees, and margins have come in at close to 7.8%, while the net profit is 20% higher on a sequential basis at close to 4,900 crore. So what could have aided the numbers? The numbers could have been higher on the back of inventory gains. Now, do remember that we had seen a sharp jump when it comes to Brent crude prices, and that could be one of the reasons why the company's EBITDA is looking higher. But this inventory gains, most of it could be notional. The key thing to watch out for from HPCL numbers would be the management commentary, and the call is at 2 p.m. So what are they commenting on? The refining segment and the marketing segment losses for the first quarter will be very important to track. And also HPCL management has given a dividend of 19 rupees. So if you look at the dividend yield, it's nearly 5%, and that is also one of the positive reasons why the stock is gaining in trade. But management commentary to track at 2 p.m. will be important when it comes to HPCL.
All right, Soumit, thanks so much for putting those numbers into perspective. And yes, the operational performance on the EBITDA front, far outlier than what the street was estimating. But it could be just that inventory match, as Soumit was saying. So a lot of clarity required there. And therefore, the street is also, just not reacting to it fully. Over 2% up on HPCL stock there. Take a look at the market. And yes, Nifty 50 is gaining over 0.5% in trade. trade at the current moment. But that's not the true picture. If we really take a look at the 5-day trajectory of 5 trading sessions of Nifty 50, remember that it is a downward bias that we have seen consistently, and therefore there are intermittent just buying opportunities that are being capitalized upon. But there is a strong bias downwards. About 1,000 odd points have been lost in last 1 week's trade. Let's take it straight across to Nishal Maheshwari, a market expert, joining in. Nishal, on a downward trend overall market direction, there could be a blip up and a blip down on a regular basis with volatility and global market really cues coming in. But it is a downward trajectory that we are looking at. What's your summation of this and a near-term outlook?
So I think the latest trigger, Nisha, has been, I think, a couple of days back when the Prime Minister asked for some austerity across the country. I think that has been the latest trigger, because now market is saying that there is no quick solution to this war, and it may be much more elongated than what people are factoring in their numbers. And that's why I think some profit taking is happening.
Right. And how do you really make sense of a market like this, Nishal, for long-term investors who have SIP investments, who have some, comfortable stocks that they have invested in for long-term, and some safe haven stocks coming in from the blue chip counter? Somebody who's just putting their savings to work, what will be the kind of, investment strategy that they can look at, and how much cash conservation, considering that market could be on a downward trend till at least next quarter?
So somebody who's investing afresh, I think he should avoid. There is no hurry to invest in this market, basically. Some people who are already in the stocks and are having safe haven stocks or blue chips, I think they should hold on. This is too much of sentiments than actual fundamentals getting deteriorated. We have to see basically how long this will continue. Nobody has a clue on that. And that's why it is best to avoid this market at the moment.
Right. And what about consistent buying at lower levels, Nishal? How much does that particular strategy hold in a very unusual and uncertain environment like now?
So I would avoid basically saying that a Nifty level is a good level to buy. I would say basically go stock wise. If that stock basically which you have been tracking comes to your level, that's the only way basically this market has to be tracked. I think avoid the broader market and Nifty levels.
Right. And in terms of the sectors, Nishal, we have seen consistent, outperformance of defense, metal in particular, and some consumption areas like FMCG also like today. How do you differentiate between the no-go, no-go areas when it comes to the sectors?
So these sectors, no doubt, has been performing well. I think if you look at the numbers also, basically, I think numbers have been pretty good. But I think another major factor is basically the FIs do not have any holdings in them. Because if we look at it every day, there is a selling of almost $1 billion by FIs, and they largely hold the old sectors, banking, FMCG, energy, and that's where they are coming and selling. So I'm saying at the moment, these are sort of safe haven because FIs do not have much holding in them.
All right. So that's the viewpoint really coming in from Nishal Maheshwari at the moment. Just a quick word, Nishal, on banks. There are down days and there is buying seen at lower level at blue chip counters in the banking space. And they are also by way of trade-off mechanism, not particularly on fundamentals, because, especially the foreign investors play on an economy basis, the bank stocks as well. So what will be your view on these banks, blue chip banks, when we consider a little longish time frame of 1 to 2 years?
So if you really look at it, they have been cheap for almost a year now. I'm saying HDFC Bank, the leading bank of the country, and in terms of numbers also, I think pretty decent numbers. I think last quarter numbers were good, but the stock is still down. And the reason being is basically that FIs want to sell the country. It is not about HDFC Bank they are trying to sell. They just want to get out of India. And that's why you're seeing this kind of strong selling in some of the leading banks. Otherwise, if you ask me, I think fundamentally it makes a lot of sense to buy these stocks. But then the overhang is so much, I think it is best to avoid them.
All right. Thank you so much, Nishal, for joining in with your expert take on the markets. Let's take it straight across to Gaura Sengupta, the chief economist at IDFC First Bank, to take stock of even the rupee movement and how the government has come up with a customs duty hike in gold and silver, which should be impacting the foreign outflow of funds for India and therefore probably stabilizing rupee. Gaura, good to have you on NDTV Profit. How do you see this move by the government?
It was required, it was also expected that they will do something on the gold front. Among all the imports, I mean, that's the one which it is the least productive in a way. But yes, the gold sector does get adversely impacted. It is a labor intensive sector, but still, I mean, it is a required measure. For example, in FY26, the major pressure on the CAD was due to gold imports. Overall, FY26 CAD was very small at 0.9% of GDP because we had good services surplus, we had good remittances inflows. So that balanced the pickup that we actually saw in the gold imports. How effective this is in terms of reducing the volume of imports is yet to be seen, because gold, at least the volume, tends to be less price sensitive. In FY26, if you look at it, we saw a 50%, more than a 50% rise in prices, and the volume of gold imports contracted by only 10%. So there will be some incremental reduction in gold import volumes, but it may not be enough, because right now what is happening in FY27 is because of the West Asia crisis, you have elevated crude prices, which will on its own take the current account deficit to around 2.4% of GDP, which is close to $100 billion current account deficit. Now, in the past, a 2% current account or 2.4% current account deficit is not a big issue. But unfortunately, it's coming at a time when the capital account has been very weak for the last few years, since FY25 onwards. So I think we do expect further measures, and especially for the capital account. The current account, before the West Asia crisis struck, current account was never the issue. Now current account is beginning to widen because of the crude aspect, but we will need measures on the capital account to get capital inflows, which will be very, very essential. So we do expect some measures to attract capital inflows.
Right. So more measures are required. But Gaura, there have been a consistent, impact on rupee because of the global uncertainty. But also the government and the RBI has been coming up with stopping treasury speculation by the banks and now curtailing the import of gold. What has really not worked for rupee at all? Because after a little bit of softening, but after that, it really resurged back to the lowest levels, record levels that it's trading at. What's your view on overall momentum and what will really arrest this fall?
I think for the last couple of years, FY25 onwards, we've seen a slowdown in FPI inflows. This is a reflection that investors look at our equity markets as slightly overvalued. But this is getting corrected because the markets have corrected. Moreover, with the 11% depreciation in the INR in FY26, in dollar terms, the equity markets have actually become less overvalued. So the expectation was that we should have seen a pickup in FPI inflows. But then we got a little unlucky with the West Asia crisis, which has triggered risk-off sentiments. We've seen $15 billion outflows in the month of March, triggered by risk-off, and that we are seeing continued FPI outflows in April as well as May. FDI India actually did attract loss inflows, but what is happening is whatever we attracted, we are losing in terms of repatriation of profit booking by foreign investors and also Indian companies investing abroad. So we will need to get some extraordinary measures to get inflows. If it's not in the form of FDI, we need to do some measures to attract debt inflows, because the import cover, which is basically how many months of imports does your FX reserves buy you, is currently around 9 months. We calculate import cover as a sum of reserves plus RBI forward book. by the end of March 2027, it can reduce to around 7.5 months. So that comfort that the FX cover gives us can reduce in a long drawn out crisis. So I would say the most critical thing is to get some inflows by coming up with certain incentive schemes, and this could be in form of debt inflows.
Right. So, Gaura, my final question to you and request a quick answer. What is the in-house penciling in of the levels of rupee if there are no big measures, more measures after gold taken by the government or the RBI?
So our base case expectation is that there will be measures, and that has been our base case for a while now. So based on that, we were expecting the INR to stabilize around 96 and a half levels. But if no measures are taken, which we do not expect, that will be an extreme case. In that case, then the depreciation, then it can easily cross 97 level if there are no measures taken, because you have to understand it's the pickup in the crude oil imports, which is honestly out of our control. So base case is there should be measures, and that should temper the pace of depreciation. If there are no measures, it will be around 90, it'll easily cross around 97.
All right, so we are penciling it now 96 to 96 and a half rupees per US dollar, already rupee at record low levels. Gaura, thank you so much for your perspective on rupee as well as many other macro aspects. Thank you. All right, looking at another important development, Prime Minister of the country has made a clarion call for energy conservation, and going back to work from home is also a critical, inbuilt strategy which has been called out. Let's take it across to the IT stalwart also and NASSCOM's representative to talk more about this and how critical and what steps can be taken to really rise up to the Prime Minister's call at this unusual time. Shrikant Velamakani, who's the co-founder as well as the group chief executive at Fractal and also chairperson of NASSCOM, joining in. Shrikant, always a pleasure to welcome you on NDTV Profit. My first question, how will the IT industry, NASSCOM participants really rise up to this occasion for energy conservation in the interest of the country?
Nisha, thanks. First of all, as you're aware, some of the largest tech companies in India are extraordinarily well run from a sustainability, energy conservation standpoint already, number one. Number two is that as part of the campuses, there's a lot of the usage of EVs, even 100% green energy in many of the campuses, and also 100% of the fleet is run by EV and so on. So there are already several steps in place to reduce the overall energy consumption and optimize the operations for energy consumption. On top of that, the NASSCOM member companies are also having conversations with their workforce to take EVs or public transport in a way that they can overall contribute to the Prime Minister's call for energy conservation. Reducing non-essential travel and things like that are all parts of the measures that will help us meet Prime Minister's call for greater energy conservation at this time.
Right. Shrikant, also a lot of technological shift has really taken place. There has been a lot of R&D and innovation in energy transformation and lack of or lower dependence on the conventional forms of energy. From the tech world, how do you see that innovation thrust really going forward? Is there a vision on what more innovation is likely to happen, and what are those important aspects that we can look at from your vantage point that you're viewing from the tech industry and innovation industry?
Tech is an essential aspect of energy conservation, and the latest tech that we have today is AI. And you've seen countless examples from various other parts of the world of people using AI in order to look at their overall energy consumption and optimize them using those AI models. So we've seen examples are like Google that has done that with their DeepMind team, which have reduced their air conditioning expense by 40% and electricity expense by 15%. So my suggestion would be to take a look at the total energy consumption in our country and see how we can bring in AI, let's say in data centers or other aspects of high consumption of energy, and bring that energy consumption down through optimizing through AI processes and AI models.
Right. So that's a great suggestion. And yes, a lot of thrust is given to artificial intelligence-led new innovation, Shrikant. But while that work is going on, that transformation innovation is going on, at the immediate measure for this unusual period, how is work from home really going to work? Is the IT industry geared up to going back to the COVID kind of days? Because it had its own set of also problems. And for the employers also, it's not the best case situation, especially in India.
COVID forced us to move to a work from home mode across the globe. And in some ways, that became a blessing in disguise because we figured out exactly how to work in a hybrid mode. And over the last couple of years, as you've seen, many of the industries have moved back fully to working in office. But the tech industry has struck a balance. It is about 2 to 3 days a week that people are working from the office and 2 to 3 days working from home. In most companies, those are the norms. And there is also a lot of flexibility considering the tech industry employs highly educated people who also are, need the autonomy, etc. There is a lot of flexibility built into the system that currently is in place that encourages work from home and work from office for where office collaboration is necessary. That balance has already been there. To the extent that we can provide greater flexibility for people to take, those working from home option in order to contribute to the overall energy conservation, absolutely yes, we are game for it. But in general, you could see that the tech industry is set up very nicely and has struck that balance between working from office and working from home. There are some things that working from office can only do, like collaboration with each other and maintaining critical services and things like that. So those services are obviously being run from the office, but there is enough flexibility built in so that we can overall have the least energy footprint that's possible while still being effective.
That's right. So work from home, need of the hour probably. But Shrikant, one final question. Also, our mobility is so heavily dependent on the fuel consumption, and the carbon footprint also grows with it. How do you see the overall ecosystem changing and your viewpoint on the way the electric vehicle space is really, gaining momentum? Of course, we have seen it really increase in terms of its, adoptability, especially because of the PLIs also and the government support. How do you see the next phase of growth in this particular space?
There's no doubt that once someone starts driving an EV, they don't go back to driving the regular cars. It's just the way world is working. It's very crucial that we solve for the infrastructure problem, that there are enough charging stations, there's enough infrastructure to manage and repair EV vehicles and so on. So that the move to EV, I think Prime Minister said many years ago that by 2030 we should be 100% EV. I would still think that would be a worthwhile goal, and moving the country to an EV infrastructure where anybody can comfortably buy an EV vehicle and then never return to driving a fuel car. I think that's the direction of travel for the country, and that'll be very helpful for the energy conservation situation as well.
All right, so lots of energy transformation really taking place. We are a new world order, and probably the conventional sources of energy will decline in terms of importance given this push because of an unusual circumstance globally. Thank you so much, Shrikant. It's always a pleasure to welcome you on NDTV Profit. Thank you.
Thank you, Nisha.
And as the thrust on energy transformation really takes shape, speaking of electric vehicles as well as renewable energy, the impact-based funding is something that British International Investment is really looking at. They have recently raised over £1 billion, and they are going to make huge investments into the Indian ecosystem of energy transformation. Here's an exclusive conversation I had with the BII CEO after they came to India over here to look at new investment destinations for energy transition. Take a look. This fundraise focused towards climate funding. Give us a sense on what is your strategy going to be in terms of deployment?
Sure. Let me start off by saying that BII has got a long track record, a deep institutional presence in India. We have a portfolio of $2.5 billion. We have invested in some of the most consequential industry initiatives in renewable energy, for example. We established a very strong platform in the form of Ayana, which generated just over 4.5 gigawatts of power here in India. We've invested in the electric vehicle ecosystem. So we have a long historical track record. And this, I should say, is on the back of very deep institutional relationships and historical ties between the United Kingdom and India. Of course, BII is owned by the British government, so our investment here is against that backdrop.
And also strategic when it comes to the government.
Absolutely. I mean, as you know, the two prime ministers met last year, and that really kind of signaled a revitalized partnership and a stronger set of historical ties. That gives us this sort of momentum to now increase our investments here in India. As I referenced, we've got a $2.5 billion portfolio. India is the single largest country of operation of BII. And for our next 5-year strategy, India continues to be the most important and strategic priority market. On climate, Nisha, we are specifically very excited about the opportunities here in India and this new fund, British Climate Partners, that we are establishing. This really creates the platform for us now to scale what we have done over the last number of years. To give you an example, we've exceeded $1.1 billion in climate finance in the previous 5 years. Significant investments in, for example, Renew, which is involved with solar manufacturing. We've invested in Battery Smart, for example. So we've not just invested in individual companies, we've invested in the entire ecosystem.
All right, BII looking at energy transition investments in India. On to an NDTV Profit exclusive. Well, tire demand may slow short term as work from home really softens the urban replacement demand for cars as well as two-wheelers. In fact, cost pressures persist from diesel and logistics inflation. Nimit has all the details on this. Tell us, Nimit.
Yes, absolutely. So the demand is going to change both immediately and directly and structurally, according to Anay Gupta, who is the president of the All India Rubber Industries Association, speaking exclusively to us. Now, directly, he says that there's going to be a change in passenger vehicle and two-wheeler vehicles, specifically rubber demand. Of course, the industry required tires. And secondly, there's also going to be a tire replacement duration change, which means that because there's going to be less vehicles on the road, the wear out time of that tire, the durability is going to increase, and that replacement demand is going to drop, which is a substantial chunk of revenue for this industry. Apart from this, the higher diesel cost, as you've also mentioned, is going to reduce margins, especially in the MSME sector for rubber. It's a very short margin anyway that he tells me, and this is going to further put pressure on that. Now, in the long term, this could mean a strategic transitional shift for the rubber industry completely. This means moving from passenger vehicles to commercial vehicles, which are going to see a jump. Public transport vehicles are likely going to see a jump, Anay Gupta tells me. He also says this metro, railway and the bus segment could see significant rubber demand go up. He also says that there is an EV-linked rubber technology sector that's blooming, that was waiting for an opportunity like this to sort of ramp up and increase its production and also gain a larger margin in this rubber sector. Says that that's also going to go up. Also, the natural rubber market, which has sort of been on the down low, is going to also see an increase in demand because it's not directly linked to fuel.
All right. Thank you so much, Nimit, for such an interesting story and a critical impact on that sector. Out of time on Markets at 12. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Mahima Vachajani, and Sharad Dubey, who's standing at the NDTV Profits market pit with all the action that's happening in the market today. At least some green on the screen, Sharad.
Well, yes, there is a smile on my face, and good afternoon, Mahima. Let's start with the day. There was a little bit of movement happening, but now we are clearly near the day's high level. That's something to watch out for. Nifty Bank also, it's a mirroring. Let's look at that. That's it. Over there, we are near the day's high level as well. But Mahima, this is a technical reversal at play. That is what's aiding the market. The first reason is the short covering. That's happening in the majority of the stocks. But nevertheless, the sentiment which is coming in, that is positive, especially for the small and mid caps. The market recovery we saw post 2 days of sell-off. And of course, the main trade is in this value buying in Smith. It's coming back. That means on the earnings specific trade, the buying is still happening, and that's a good actually sign, to be honest. Strong buying coming in the metal space also. Of course, the dollar on the other hand shows some sign of weakening also, and this is of course on the global cues as well. The rupee has strengthened, a very minor one after what we had seen in the last 2 days, and even the VIX slightly cooled off, or a very neutral right now. But nevertheless, we are waiting for some other future events to happen, especially on the geopolitical front. Crude, they have snapped the 3-day gaining streaks. A little bit of relief is definitely there. And if you look at overall how the momentum is moving, Street is still expecting price or diesel, price hike coming in for this petrol or the diesel segment. The focus will be there on Trump and Xi Jinping, in markets this week, how things move ahead. But largely this is on the tariff issue rather than the geopolitical developments, but we'll definitely be watching out for. But let's look at the earnings also. The Q4 earnings, that is something which we'll be watching out for. We have Bharti Airtel, we have Cipla, Tata Motors CV, DLF, to name a few, and these are the stocks which should be in your radar. And of course, during the market hours, we might see the numbers coming in from Cipla. But nevertheless, there is a breather for the markets, but we wouldn't say that there is a very strong trend coming up, whereas a lot of cues and earnings are there. Back to you, Mahima.
Right, Sharad. So we'll be watching out for all that action, right? But right now, let's take a quick look as to what the watch list looks like. What are the stocks buzzing and why are they buzzing? Now, firstly, jewelry companies are in focus, all seeing some pressure in trade today because gold and silver, as well as platinum import duty, has been risen from 6% earlier to almost 15% now, and this could hit the margins of these jewelry companies. So we're seeing pressure in Titan, Kalyan, Senco, etc. Pine Labs is the other one where there was a share lock-in expiry, and because of which we're seeing the pressure coming in this particular counter. Same as Niva Bupa. Here also there was a share lock-in expiry, and because of that we're seeing pressure coming in for this counter. The other set of stocks that are in focus ahead of earnings is Airtel and Cipla. Both of these stocks, running ahead of these of the expectations. Dixon is the other one which is expected to have a flat sales volume growth, and that is why it is one of the stocks in focus. Vodafone Idea, however, is zooming in trade today, probably to consider a fund raise, and we'll of course give you more details on the show on this one as well. But that's buzzing on the back of that. Tata Power is the other one where overall earnings was a muted growth. The net profit was where the area of concern was, and overall numbers were below expectations, and that is why we're seeing that downtick coming in the counter. In terms of Texmaco Rail, big win, 4,000 odd crore of order win is what the company has gotten, and that's why we're seeing zooming moves coming in this particular counter. IIFL Finance is another trading counter where there is positive impact of so the settlement of tax assessment basically has happened, and that's why we're seeing positive moves coming in on this one. Ratnavir is the other one which eyes higher ROE and ROCE in FY27, and that's why we're seeing positive moves coming in on this one as well. Berger Paints also is the other one. Good Q4 numbers, volume growth very steady, and outlook also looking steady. I think decorative volumes saw very good growth, and that's why it's been buzzing positively in trade today. And Asian Paints also, in fact, buzzing on the back of that. Possibly, the price hikes that they've taken will augur growth going forward as well. And one of the top volume buzzers is Asian Paints, and then top Nifty gainer as well. Deccan Gold, again, this is one of the counters that's buzzing on the back of the custom duty because it's a gold miner. It's a positive news flow coming in for this one, and that's why it's buzzing positively. Lastly, Rossell Tech Systems is the other one where it recorded the highest net profit in the last 3 years, and this is one of the counters where we're going to speak to the management also in the small cap buzzer. So this is one of the counter that's also buzzing in trade today. So that's with regards to where the entire watch list for today stands and where the action is in the market is actually coming in from. But Sharad, over to you for the rapid fire round.
Thanks a lot, Mahima, for that. We're joined in by Gaurav Sharma. Good afternoon, Gaurav. It's always a pleasure to have you. We'll start a rapid fire segment, and I have two stocks, Niva Bupa and Pine Labs. Both of them, of course, reacting on the lock-in expiry as well. Do you think either of these stocks good time to get in some positions in, or would like to avoid these counters? The counters are Niva Bupa and Pine Labs. Gaurav.
Hi, Shara. Very good afternoon to you and to all the viewers in NDTV Profit. Both the stocks have a similar story to tell today. The lock-in has ended. Pine Labs witnessed steep sell-off. Niva Bupa slightly holding around, just about 2% down, and looking at attractive as far as the chart patterns are concerned. So I'll go with Niva Bupa at the moment. Further slide towards 80 will be a good opportunity. Take a stop at 76 and look for targets close to 88-90 in the coming 1 to 2 months.
Right, and Gaurav, your views on Cipla and Bharti Airtel just ahead of the numbers. Any kind of a positioning can be there. Their numbers are coming today.
I was always been a admirer of Bharti Airtel, a very fine value creator. Although as of now some kind of beating is witnessed, it is trading off highs. Further slide towards 1600 will be a very good opportunity.
Right.
I still wonder whether that will be possible.
Right, Gaurav, we'll come back to you once. Cipla's numbers is out. Mahima is analyzing the initial numbers. Mahima, what are the numbers stating?
Right. So overall, I think we're seeing some bit of a reversal in with regards to where the charts go from the day's low point. Overall, some positive gains is what we're seeing on Cipla. Net profit at that 555 crore versus that of an estimate of 700 crore. So a miss in terms of where the bottom line goes. Revenue at 6,500 odd crore versus that of an estimate of 6,700 odd crore. So slight miss there, but largely in line in terms of where the top line goes. Margins at 14.6%. So miss in terms of where the margin also goes. So initial reading is kind of suggesting as to the numbers don't look really positive. Even in terms of where the EBITDA number goes, there's a slight miss when it comes to the EBITDA number as well. If we can try to get that number flashing, there you go, 955 odd crores versus that of 1106 odd crore. But I think we'll soon be joined by Varsha, who tracks this very closely. So Cipla, let's try to pull the chart up as well in terms of where it is at right now. But Q4 overall is in terms of profit. In terms of profit, it's a big miss versus the estimate. But in terms of revenue as well as EBITDA, it's a slight miss. I think we have Varsha, who's standing by, who tracks this very closely. Varsha, big miss on profits, but what's the first cut looking like?
Yeah, Varsha.
Should I start? Yeah, overall the numbers are actually weak, which was expected, and it has missed estimates. The numbers were expected to be weak, and it has missed estimates, and hence if you see, the overall performance was expected to be weak on the back of pricing erosion or on the back of lower sales from Revlimid, and of course the Lenirotide, which had a minimum contribution to the overall business. Now, Lenirotide is nothing but a drug which is used to treat hormonal disbalance, and Cipla's partner Pharmathen has received import alert, and that unit produces Lenirotide for Cipla, which has a significant sales to the top sales contribution to the Cipla. And also the high base in the US last year makes the decline look sharper, though we are actually waiting for the press release to come, and we'll actually know how the US market has performed. But unfavorable product mix has of course impacted EBITDA for the company, and the Revlimid sales and Lenirotide sales have impacted the overall numbers, and hence we are seeing this miss on the overall number. But yes, we are waiting for the press release.
Thanks a lot, Varsha. We'll be tracking Cipla's earnings and also the internals, and a very interesting take coming in. Just wanted to get your views in. Mahima, if you could just get the chart in.
Let's try to pull the Cipla chart up. Shayad it's not doing much, not reacting much probably. Let's try to pull the chart up and see as to what it's doing in trade right now. There you go. Although now it's off from its day's low point, in fact up 1% as we speak, though it's not matching its highs for sure, but it's still come off from its day's low point. In fact, if we take a look at the chart from broad end of spectrum as well, if we can try to pull up the 1 week chart and see as to how it's done, it did try to touch its last resistance, in terms of where, which was around 1380, but it broke that, and now it's trading, around that 1300 odd level. So the crucial resistance here would be around that 1370 mark, and the support right now for this one is at around 1165. So that's with regards to where Cipla charts go. But if we have Gaurav on the line, I think Gaurav, any view on the charts for this one? The stock is climbing as we speak, 2% move coming in for Cipla, though missing estimates, but I think some positive commentary is something that the street is probably estimating and probably trading on that. But on the charts, your view?
Mahima, hi. Good afternoon, first of all. Yes, it is an underperforming stock within the pharma space itself. Still, also, I don't find any meaningful uptick coming in. I'll wait for some more time, let the stock settle down. 1375 is the breakout level. Once it surpasses that range, then only it has potential to climb up to 1500, 1550 odd levels. Until then, it is a void from my side.
Just to point out, the RSI just has crossed that 60 mark, not percent, but 60 mark, and that's why that's something that we'll be watching out for. But like he said, there's no momentum that we're seeing on the stock right now. So that's of course with regards to where Cipla goes. There you go. There's a tax expense of around 157 crore versus that of a 279 odd crore is what we're seeing. So of course that's with regards to where Cipla goes. But let's go back to the rapid fire round. Sharad, over to you.
Right, thanks a lot for that, Mahima. The next stock in the rapid fire segment is Tata Power. Gaurav, your view on that Tata Power? Of course, the numbers were on the weaker side.
Again, Tata Power has been one stock that has, not been on the traders' radar for quite some time, just because it is trading sideways. Numbers also on the dismal side, and a knee-jerk reaction seen there. I still don't find any hope in this stock as far as short-term trading is concerned. Long-term investment is completely a different story. I'll advise to take a stop at 395 in this stock if someone is holding it, especially from a trader's perspective, because this stock will again struggle to surpass 445 zone.
Right, and the next stock is Texmaco Rail, a very strong order win, and that also an export order win coming in. Stock has been doing well. Do you think a further up move is possible in the stock?
Pretty much, and why not Sharat, a company having a 4,800 market cap, getting a 4,000 plus crores of orders, especially from the international front. This can completely be a turnaround story for Texmaco Rail. If we look at their annual sales figures, this particular contract also surpasses their annual sales front as well. So a very big development for this company. Clearly positive view, Kamp.
And IIFL Finance also important developments coming in. Your view on that? Do you think this rally might sustain going ahead?
IIFL Finance is underperforming, trading in the range, trading below its short, long, and medium-term averages. I'll wait for some more time. I'll only take a position closer to 500 odd levels. That is a breakout find. Then only a subtle up move can be expected toward 540, 550 zone. Until then, it is better to avoid.
And strong earnings coming in from Ratnavir Precision and the outlook as well. Anything on the charts?
Ratnavir, again, not too great as far as charts are concerned. A sideways kind of a move was seen. But yes, if someone is having a position, they can hold on to their long position. Fresh buying is advised only when the stock crosses by 190 odd levels. Thereafter, it has potential to go up to 210 and 220 zone in the coming couple of weeks.
Right. That's the end of the rapid fire, Gaurav. And over to you, Mahima. What is there in the Google trending stocks?
Right. Let's try to pull that up and see as to what are the stocks that are trending on Google currently, and see as to why, of course, these are trading. There you go. MTAR Tech. This is on account of them raising guidance, probably, that we're seeing. A lot of people searching for this one. Oil India is the other one. Back on Asian Paints buzzing today, top nifty gainer, of course, and Bharat Forge is the other one. Gaurav, I'll take your view on MTAR Tech specifically. The management has gone ahead and raised their guidance, and I think we seem to have lost Gaurav, but we have Siddharth Khemka, head of research wealth management at Motilal Oswal, joining us now. Siddharth, a very good afternoon to you. Thank you so much for taking out the time. We were just pulling up stocks that are working well, and in terms of Google trends and what people are searching right now, and MTAR Tech seems to be the one that people have searched most today. This is on account of the management raising the guidance, of course. Any view on this counter?
Hi, good afternoon, Mahima. Glad to be on the show. I think if you look at MTAR, it's a strong structural story that we like. It is well positioned to benefit from the Oracle Boom Energy partnership, and Bloom Energy, which is its technology partner out of US, with a 60 to 70% wallet share in the critical assemblies in the fuel cell business. So I think with the growth or the global growth of AI, while we do not have a direct AI play in India, what the market is looking for are some of these related players which will benefit from this growth in AI data centers, and hence we are seeing that kind of strong growth, strong business growth, as well as strong interest both from the market as well as strong growth. So what we are forecasting is almost an EBITDA CAGR of 65% and net profit CAGR of 90%, and hence we believe that the strong growth would continue to enable this company to attract the premium valuation, plus the recent upgrade in the terms of growth guidance. That is only adding to the growth and the visibility for the company going forward. So yes, we have a very positive view there, and we believe that the strategic positioning in the clean energy solution and the increasing adoption of reliable on-site power for data centers, that will drive the growth for MTAR Technologies.
Okay, all right. So that's the view coming on MTAR Tech. But Siddharth, the other pack of stocks that are in focus today is the jewelry counter, right? We've seen an increase in custom duty of import of gold, silver, as well as platinum. Earlier, for basic custom duty, the rate was 5%, which has gone up to 10%. And for cess, it's gone from 1% to 5% now. So overall effective tax now stands at 16%. This was the case, before 2024 as well, because the budget had reversed this and had brought down the tax rate to 6%, but they've now gone back and reversed the same again. So just want to understand, according to you, considering that there will be near-term pressure on a lot of jewelry companies because working capital for them will go up, plus demand could be subdued, people might delay their purchases. What's the view like for jewelry counters right now, and which are the counters that you still remain bullish on?
So definitely, Mahima, I think this was something which was in the coming with the Prime Minister giving an advisory last few days that Indians should try and avoid purchases of gold, gold jewelries at max at wherever possible. And I think that is in this environment where we are at an all-time low, record low rupee, this kind of measures being taken by the government, as we are one of the largest importers of gold. And I think this will definitely discourage some volume and dampen the volume growth in the near term. But I think if you look at some of the nationalized players, for example, players like Titan, that is something that has been consistently gaining market share. And with this kind of factor coming in, I think even the case for a large nationalized branded player like Titan will go up further. So as I said, near term, definitely there is a negative pressure because of the pressure on volume growth. But slowly, gradually, I think any declines on stock like Titan over the next few days can be taken as an opportunity to add to a long-term portfolio. This is one of the few large cap stocks which has shown consistent growth. Plus, what we are also forecasting is that a 20% earnings growth for the next 3, 4, 5 years. That kind of visibility in a large cap is something that will create a lot of value for long-term investors. So I think, yes, near term, definitely pressure, but slowly accumulate a quality stock like Titan. Some of the other players, I think, may be under pressure for some more time. So I think better to avoid the remaining players for now.
Right. On to Bharti Airtel. It's going to come out with its quarterly numbers also. And to decode that, what are the previews suggesting? We're joined in by Somit Sarkar. Somit, what are the expectations for Bharti Airtel?
Well, muted set of numbers is what is expected from Bharti Airtel in the fourth quarter. Revenue and EBITDA is expected to be higher by just 1 to 3 odd %. EBITDA margins are expected to come in at 58.1, while the net profit number could be higher at around 16%. Now, if you look at the India mobile business, there the revenues are expected to be up by around 1%, EBITDA similar kind of jump, and subscriber base is expected to come in at close to 37.2 crore as against 36.85 crore, while the ARPU number is expected to be flat on a sequential basis at close to 259. But do remember, in the fourth quarter there are 2 less number of days as compared to third quarter, and that is the reason why ARPU is flat. Had that not been the case, ARPU would have increased for Bharti Airtel in the fourth quarter. Now, apart from all the other segments, only broadband segment is expected to report some kind of growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, all other segments will report a muted set of numbers. Now, Airtel Africa has already reported its numbers, and they were a pretty much strong set of numbers. So some rub-off effect, positive rub-off effect of the same could be seen in Bharti Airtel's consolidated numbers as well. But the key things to watch out from Bharti Airtel numbers would be how they are reorganizing their strategy towards Airtel Africa. What is the kind of ARPU increase that they are expecting, any tariff hikes going forward, and how they are seeing what the capital expenditure plans for FY27 would be important to track.
Right, interesting to track the Bharti Airtel. Thanks a lot, Somit, for that. But Siddharth, just wanted to get your perspective also for this stock. How are you seeing this, for Bharti Airtel?
Definitely, Sharad. I think the stock has been under pressure largely because of few factors. The price hike has not happened for almost now 18 months, and I think now the street is not expecting a hike until the Jio IPO comes in. So that is kind of a bit of a drag or an overhang on the Bharti Airtel specifically. The second is the recent news flows about the restructuring of the Africa business, the shareholding restructuring, where there is likely to be some cash outgo from Bharti to the shareholders, so Bharti Enterprises, which is the promoter-owned entity. While the amount is not significant, but that does raises the questions on capital allocation in that sense. In terms of quarterly results, a pretty steady quarter. We expect Bharti's consolidated revenue to rise about 1.6% Q on Q. There is likely to be a strong growth in the home segment, which is likely to go up 9% on a sequential basis. Africa business is likely to increase 3%, and there will be some benefits of the FX movement.
Right, Siddharth, definitely. Another counter is something we should focus on. That's Dixon Tech. Of course, on the back of numbers, the stock is buzzing. But what's the entire story about it? We are joined in by Puneet. Puneet is going to explain us. Puneet?
Well, thank you for that. It's largely what we are seeing that even though the results weren't the greatest, just 2% growth in revenue and EBITDA has actually fallen as well. I think what the street is looking at is that the volume guidance has been given flat. If Vivo happens, it'll be over and above this. So 32 million smartphones, that's similar to the FY26 number. But the management highlighted on the con call that, you could see they are very, very close to the approval for getting for the Vivo JV. Now, it's been a 17-month wait since 15 December 2024 when the JV was announced with Vivo. They've still not gotten approval, but that will be the incremental volume push. And I think that's one of the key factors. And the acceptance that the mobile business is not the only one to look at. Industrial EMS, they are late to this opportunity, but it's something that they will look at very aggressively in the next 1 or 2 years, and a big acquisition that the company has said in the next 1 to 2 quarters.
Thanks a lot, Puneet, for that, and that's one of the key reasons also why Dixon Tech is gaining in trade. Siddharth, a quick view on Dixon Tech right now. What happens now?
Yeah, I think a lot of factors at play. So while we are positive on the long-term prospects for Dixon, we have a target price of almost 14,000. The stock is at its lows, but I think the key factors would be the smartphone volume traction going forward, which has been weak recently. The approval for Vivo JV again pending for a long time. PLI 2.0, which could focus on boosting mobile exports, and the pace of commissioning of the display facility, which would happen on the second half of FY27. For now, we are forecasting about 12% earnings growth. And for the valuation, we believe that the stock could remain sideways in a broader range until there is some of these triggers which play out. The main trigger being the approval for the Vivo JV.
Okay, all right. So that's the view coming in on Dixon. But, a late night rescue operation in Chhattisgarh has disrupted a trafficking network targeting one of India's most vulnerable tribal groups. While the rescue of 13 Baiga children is a significant victory, the other story lies in the coordination behind it. By linking police enforcement with NGO intelligence, the state has demonstrated a working model for the child protection ecosystem. Listen in.
Kabir Dham district of Chhattisgarh, a coordinated effort has led to the rescue of 13 children from the Baiga tribal community. These children, aged 8 to 15, had been missing from their homes for nearly 8 months, trapped in a cycle of bonded labor and exploitation. The operation began after Association of Voluntary Action, or AVA, an NGO partner of Just Rights for Children, alerted police about information they had received regarding children allegedly being forced to work like bonded laborers. Acting on the information, police teams led by Superintendent of Police Dharmendra Singh launched late-night raids in Chhattisgarh's Kavardha, about 110 kilometers from the capital Raipur. During the first raid, 4 frightened children were rescued, and what they told officials led to an even bigger breakthrough.
उनसे जब बातचीत की गई प्यारपूर्वक तो उन्होंने बताया कि साहब आपने हमें तो बचा लिया, लेकिन मेरे गांव के और भी बहुत सारे बच्चे यहाँ पर बदवा मजदूरी कर रहे हैं। उनकी निशानदेही में बाकी जगह जब छापामारी कार्रवाई की गई तो टोटल 13 बच्चे हम लोगों ने बरामद की पुलिस के साथ।
During counseling, officials discovered that all 13 children belong to the Baiga tribe, one of India's particularly vulnerable tribal groups. The children told counselors they were made to work from morning till night and were paid just ₹1,000 to ₹2,000 per month. Police arrested 10 traffickers and have now registered cases under trafficking, bonded labor, child protection and child labor laws.
अगर इस प्रकार के और भी किसी की कोई गतिविधि में पाया जाता है उसके विरुद्ध भी सख्त कार्रवाई करेंगे और किसी भी प्रकार की कोई किसी को सूचना मिलती है तो मुझे या हमारी पुलिस को या जरूर बताएं या इस संस्था को बताएं जिससे कि हम उन बच्चों तक पहुंच सकें और उनका सहयोग कर सकें.
But for child rights groups, rescue is only the first step. Rehabilitation, education and reintegration are just as critical.
जिन 13 बच्चों को बाल कल्याण समिति के समक्ष JRC आवा और चाइल्डलाइन की संयुक्त टीम ने प्रस्तुत किया, उन सारे बच्चों को शिक्षा से जोड़ने के लिए शिक्षा विभाग, डीएम और श्रम विभाग को संबंधित विभागों को निर्देशित किया गया है ताकि बच्चों का समुचित विकास हो सके। बच्चों के रेस्क्यू और पुनर्वास की प्रक्रिया में जेआरसी, पार्टनर और आवा की महत्वपूर्ण भूमिका रही।
Across India, organizations within the Just Rights for Children network say trafficking, child labor, and child marriages are often deeply interconnected, trapping vulnerable children in cycles of exploitation. And that is why this case serves as a blueprint of what can be achieved when a vigilant community, an informed civil society, and a responsive police force work as a single unit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome. You have tuned into the special offering on NDTV Profit, the Bullion Blow. And I have with me my colleague Shreyansi, I'm Nisha, and we are going to take you through the big story of the day today and its overall impact. So today's big story, India has sharply raised the import duties on gold and silver, lifting the effective tax from 6 to 15%, a move that could really make bullion and jewelry significantly costlier for the consumers. What this government's move does is disincentivize gold imports, which will arrest the forex outflows and also arrest the rupee fall, which is the need of the hour for our economy. Now, it impacts the consumers, jewelers, companies and their stocks. For jewelry companies, higher duties mean rising input costs and tighter working capital, while near-term demand may cool just ahead of the festive as well as the wedding season. So looks like for a country which is really in love with the glitter of gold, Shreyansi, it looks like this wedding season could be a little bit of a dampener now.
Absolutely, and it does start to look a little bit damper as well. The sparkle really seems to be dimming just a bit. And before we move on to that, let's quickly also zoom out just for a bit and take a look at some of the factors that you should be watching out for gold as well. You know, in terms of gold, you do have Fed rate hike bets, and you're looking at about a 40% chance that is being penciled in right now on that front. Now, that's, of course, something that you're looking at. Other than that, central banks have also ramped up their buying. So PBOC, in fact, bought most gold that they have since April 2024, quite recently. That's something that you're looking at, which was a very important headwind back in 2025 that's making a comeback yet again. So that could still stabilize prices as well, and that's something that you're looking at. And other than that, de-dollarization and safe haven buying, also something that you should be keeping on your radar that could be really cushioning this blow, and those are some of the factors that you should keep on your radar. But as we do that, let's also get a ground level view in terms of how this duty hike really reshapes the gold and jewelry industry. In fact, Mahima is standing by with that number crunching.
Right. So, you know, just to give a background as to what's happened, right? So earlier in 2024, July 2024, the budget had reversed this duty structure. They'd taken it back to around 6%, both the basic custom duty and cess combined. But that has now again been reversed. So there's a Uno reverse play here, where now we're looking at basic custom duty at 10%, cess at 5%, and that takes the effective overall import duty at that 15% mark overall on import of gold and silver both. Additionally, jewelry findings will attract a duty of around 5%. Platinum findings will attract a duty of around 5.4%. And concessional duty provisions for import of catalyst or ash containing precious metals will also attract a duty of around 4.4%. Plus, on top of that, concessional duty with regards to UAE imports will also be taken into consideration, and you know, there will be duty hikes there as well. So that's point number one. Now, in terms of how this overall impacts companies, but before that, you know, it's important to take a look at the gold import data as well, because overall in the past couple of years the gold import data has been rising both on account of value as well as volume. As far as FY26 goes, the overall estimated increase is around 24% in terms of value, but volume slightly, where FY25 goes, the downtick was around 4%. But India is the second largest consumer of gold imports after China, and we consume all the gold that we import. So that's why this becomes very important. Now, how this impacts jewelry companies as a whole is because, one, raw material cost will become expensive for them. So that means they'll have to keep more working capital, pay more interest on that. On top of that, demand could, see some subduing because purchasers could kind of delay their purchase because of this hike in duty. And lastly, in terms of where margins go, companies might not be able to pass on the full price hikes to the consumer, and that is why their margins will get impacted. And on the back of that, a lot of stocks remain in focus. All your jewelry names, from Titan, Kalyan, Senco to Thangamayil, PC Jewelers, etc., get impacted on the back of this. But then on the flip side, you have something like a Deccan Gold, which is doing fairly well because it's a minor and it benefits from this price increase. So this is the overall view of what's happened and its multiple impact on the economy as well as stocks.
All right, Mahima, thanks so much for summing it up for us. It's a big developing story today, and it was the need of the hour, as economists also put in that there were some measures that were expected from the government, and this is not all for arrest of rupee fall. There could be more. But let's focus on the jewelry industry and what it means for the overall sector as well. Shivankar Sen, who's the MD and CEO of Senco Gold, as well as Vandana Bharti, Head of Commodity Research at SMC Group, joins us now. Shivankar, starting with you, what does this really mean for the entire sector?
Well, what the steps the government has taken, I think it's the need of the hour. And the industry is with the government in whichever ways possible so that the current account deficit could be controlled and the rupee can be made stronger. So short term, we understand that this increase in duty will lead to certain outcomes. One is that consumers will go consumption, and that would directly lead on to lower imports for India. So that is number one. Number two, I think as an industry, we are also working towards encouraging consumers to exchange their old gold. So the household gold that is already lying in the houses, just imagine that the value of their gold goes up by almost 8-9% overnight. And I think that those who have weddings in the family, who had to buy jewelry in terms of their need, I think that it's a good opportunity for them to come and exchange their old gold. So I think all the retailers, we are also taking steps. Initially, we were a little, maybe 1 year, 2 years back, the old gold exchange was about 25-30%. Today, it is about 50-55%. So we are also relaxing certain norms in terms of deduction and losses that we charge the consumer when they give their old gold, just to encourage them to give their old gold, and that would indirectly help the economy to reduce imports. So that is the second thing that we shall be doing. The third thing, I think that it's going to be a 6-month, 1 year time for the economy to stabilize. There is meetings happening today between India and Iran. There are meetings happening between US and China. And if the outcome of those meetings become good and the crude oil prices cools down and we can see the rupee getting stronger, I'm sure that that would have some benefit, give confidence to government, and over 6 months, 1 year time, the duties could come back. But for now, we are also from the industry side requesting the government that along with this step, we must plan to mobilize the 20,000, 30,000 tons of gold that is already lying in the economy. That is the real gold mine that India is sitting upon, the temple gold, the household gold, the gold lying with the ETFs, mutual funds. And then the faster we can all come together and solve this problem, I think that will really do a lot of good for our country.
No, absolutely, and it does look like that gold mine that you've talked about, that could be tapped as well, given that you do have this measure that's kicked in right now. Thank you so much for helping us out with that context. I'll also take it across to Vandana. Vandana, I wanted to try and understand what you think about the key tailwinds, what's going to be happening from here as well, and what do you think will arrest this sort of uncertainty right now, because there are a lot of tailwinds that you're looking at with everything put into the picture, because there's central bank tailwinds that you're looking at. Other than that, there's a lot that you're looking at when it comes to gold prices, just as Mr. Sen also highlighted. Can you take us through some of the tailwinds that you think can be driving the momentum? Can you take us through what you expect for gold prices as well?
Continuing with the discussion of Mr. Sen, I think that EGR is a very good concept before this custom duty hike. EGR sort of tool can help Indian investors. And if we talk about the gold prices, yes, the 70% rise in the prices in 2025, it is giving a real headache to the Indian consumer as well as the Indian government, because ultimately the volume is same, is remaining the same, but the value it rose drastically, and the total import bill was of around $72 billion, I suppose, in 2025, and it is giving a big hole to the government pocket. So yes, for the time being, this step is really needed by the government, and the entire economy, the entire people, they are with the government, and more strong steps should be come in coming days, because The real problem is supply disruption of crude oil prices, and behind the curtain they are talking, but there is no concrete result yet now. And the entire world, they are eyeing on the US and China summit. Let's see, we are keeping our finger crossed for some kind of cool down to the prices of crude oil, because China is trying to for the supply side, smooth side from Iran and all, and that will give impact on the whole economy, including the gold prices and all. And INR is the real concern.
Absolutely, Vandana, and that just about sums it up. I'll come back to you with that question in terms of those tailwinds as well. But, as we do that, let's also get some more context right now, because as India has hiked the duty on gold and silver imports, the country's deal with the UAE is going to also be in the spotlight as well. You're looking at gold bar imports from UAE rising sharply from $2.9 billion back in 2022 before India-UAE CEPA as well to somewhere close to $16.5 billion in 2025. Rishabh is standing by with some of those important details.
Absolutely. As you have this import duty on gold that has been hiked, another key aspect of gold imports in India is, of course, via the United Arab Emirates. And the India-UAE FTA, which is called as the CIPA, is at the center of this. Now, let me tell you why it's in focus. What we've seen since 2022, since this trade deal was started, we've seen the fact that gold bar imports have risen from roughly $3 billion in 2022 to about $16.5 billion in 2025. And this is all thanks to a tariff rate quota mechanism that has been established between the two countries. What essentially this is that gold imports can come in at a 1% discount, tariff discount. So that incentivizes a lot of importers to import via Dubai or other cities in the United Arab Emirates. And that's why we've seen a lot of sort of import pressure is also, of course, at this hike that has come. What we've also seen is that this quota is roughly at about 120 tons right now, but it will go up to 200 tons from 2027. So it will cover a lot of India's entire gold diversification. Roughly 25% of India's gold demand will be coming in from UAE, and that will be at some sort of a discount thanks to the India-UAE FTA. So what we've seen is a lot of sort of pressure that has built up as a result of this FTA on especially the import bill, because you've seen gold imports go, total gold imports to India that has go from about $36.5 billion in 2022 to $72 billion now. And it makes up a substantial chunk of India's import bill. So that's what we're picking up when it comes to the India-UAE trade.
All right, so that's an important aspect to also watch out for. Thanks, Rishabh, for all those details. But remember that oil has become the new gold for the country, and our import bill is really inflated because of the crude oil prices going up. Kumar Jain, who's the national spokesperson of IBGA, joins in now. Thanks so much, Kumar, for joining in. Of course, with this particular move by the government, it will not only increase the prices of gold and silver, and how do you see, how is industry really reacting to it? And second, the old days of, smuggling of these precious commodities really has a risk of increasing. How do you see this particular move?
Sir, repeat the question.
Yes, so Kumar, I was asking the impact of this move on gold and silver prices, as well as the risk of smuggling again coming back.
The trouble, as Modi ji has announced, no buying a gold for 1 year. And this is secondly the rise on the stamp duty, which has gone 6% to 15%. It's a big attack to the customers. As those now it's a peak wedding season. People are coming to buy their jewelry for this purpose of the wedding and all. So people have stopped buying today onwards. You don't see the customer in the shops. People are waiting now. As it has gone so high, around 15,000 rupees has gone high, almost 15%, which is a big, I would say it's a big rise in the gold duty. They should have find other solution. As we find the customers bring their own gold So government would have taken that no GST on gold. Would have taken there is no exchange GST on while buying and purchasing. That would have been different solution. People have thought of it. Now it's a very difficult. It will increase more smuggling.
Yes. All right, Kumar, hold on to your thoughts. Shivankar Sen, you heard the industry body and the association talk about it. Give us a sense on the increase of the prices. And second, last time we chatted, you had also mentioned that with the increase in gold prices, also the ticket size or the amount of gold used, you're making lighter jewelry. Is that something that has become a new norm now?
Yes. Prices were about 1,51,500 for 10 grams. Today, it is about 1,59,500. So it has gone up by 6 to 7% on an average. So that's been the kind of jump that we have seen. Yes, if the rupee starts getting a little stronger, you will see the prices cooling down, but 6 to 7% is the jump we've seen today. And because the prices have jumped up so much, or also anyway, the prices were on an upward trend. So we are, as an industry, looking at 2-3 things. One is that how do we make jewelry which is an 18 karat, 14 karat, 9 karat. So that would make the usage of 24 karat gold lower. And that would ensure that the job creation and the employment of the karigars continue to happen. So that is one part of it. Second is that the jewelry has to be made lighter and fitting into the budget of the consumer. And third is the old gold exchange. So if the consumer has 15 grams gold lying in their house, and if they come and buy 20 grams, so they will only have to pay for 4-5 grams, and the 15 grams can get adjusted with their new jewelry. So these are the 3 things that the industry would work towards to ensure that in the limited resources available and the availability of gold that is there, we can make the best out of it and fulfill the need of the consumer. So this is how it is. But as sir is saying that initially, because of the price jump, I think consumers will be in a wait and watch mode, that whether the price will remain at these levels or whether the price will come down again, what is going to happen in the market. But once the prices stabilize, and I think the government shall also work towards the industry to give the confidence, and automatically we will see the consumers, because the wedding season is round the corner. There are a lot of weddings in June, July, and then the festive season comes in from August, September. So we will have to work towards making the full demand of the consumers fulfilled. So that's how it is.
Yeah, no, absolutely. Thank you so much for helping us out with that bird's eye view when it comes to demand as well as the festivities lined up. And with that, I'll also take it to Mr. Kumar Jain as well. Sir, pleasure speaking to you as always. Wanted to just try and understand, since you're joining in with fresh perspective from Zaveri Bazaar as well, wanted to try and understand what are the kind of footfalls that you're seeing right now, and do you also expect that lesser people are going to be turning up at the store for physical buying of gold?
Yeah, beg your questions.
Yes.
Beg your pardon?
Yes. So I wanted to understand if you think that the footfall is going to be reducing in Zaveri Bazaar and markets like that.
Yeah. Now, as soon as the Modi ji has announced that buy the gold, no, not buying the gold, people have stopped buying. We are also insisting customer not to buy the bullion. Just simply they come, then they buy just their festival purpose, festive season, like wedding reason. So just simply they buy 100 grams and get over. Otherwise, usually we have customers of a big buying, big ticket customers. But customers are there. Still they are buying little, very little.
No, absolutely, and that makes sense in terms of the kind of footfalls that you're seeing in Zaveri Bazaar as well. So there's a definite hesitation that you're seeing. That's the word coming in from Mr. Kumar Jain as well. With that in mind, let's also get to the word coming in from government sources that are informing your channel that the move to hike import duty on gold, silver and platinum aims at conserving forex amid Middle East uncertainty as well. And Shrimi is joining in with some more details on this one.
Anshi, in fact, 5 reasons which has been given by the top government sources on the fact that why they have increased the import prices. And the number one is conserving the foreign exchange. That's very, very crucial. And they are underlining the fact that because of the gold import, there's a massive outflow of forex, and they are trying to curb this while increasing the import duty on all the precious metal, including yellow metal, that is gold. The second important point which they are giving, that already high crude prices along with shipping disruption already causing and widening your current account deficit, and adding on to gold will, making this entire maths of current account deficit more concerning. So this step is taken. The third important point, which is again very crucial, government at this point of time seeing the gold import as very discretionary in nature, non-essential commodities, and that is why this curb is put in place to sort of discourage people to spend on gold. So that's third point. And more important, that government at this point, with the prolonged West Asia crisis, wanted to have a balanced approach. So this is not something that they're trying to ban, purchase or ban import, but they are trying to sort of discourage to have a more balanced approach as far as macroeconomic stability is concerned, and to maintain the economic resilience.
Absolutely, and thank you so much, Rimi, for joining us with that entire perspective when it comes to this exclusive as well. But let's also shift focus back to Zaveri Bazaar, which is something that we were talking about with Kumar Jain as well. The street reaction to the hike in gold and silver import duties is something that we should put the spotlight on as well. And we also spoke to the common man jewelry shop owners at Mumbai's Zaveri Bazaar, where jewelers are warning of a sharp hit coming into footfalls. Before we come back to our guests with some more perspective, let's take a look at what the buyers then had to say in terms of whether they're going to be shelling out all of this additional money from their pockets.
History has shown us that increase in custom duty is not a deterrent to buy gold. People in India are mad after gold, and gold is the only investment right now which has given excellent returns on buying gold. So that is not a deterrent. Only thing is that we feel the trade will go into the wrong hands because of high custom duty. Only smuggling will increase, and that will not be a very good deterrent to import golds. When the PM sir announced that 1 year you don't have to buy gold, since then we are seeing no footfalls at all in their stores, So people have really greeted the call well. PM sir's call well.
प्रधानमंत्री ने तो बोला है सोना 1 साल तक नहीं खरीदी करना चाहिए, पर घर में फंक्शन होने के कारण कुछ ना कुछ थोड़ा सोना तो लेना पड़ता है.
All right. So, Shubhankar, on this particular point, you heard the several consumers. And of course, the price is now not making sense. But gold is a very critical, part of our society, as well as many of our festivities and occasions and weddings, which is like a big fat wedding in India all the time. How have you seen the demand, and what is the demand picture that you're seeing after this additional increase in already elevated gold prices? Your final word on that.
So see, it's still early days. It's just been announced last night, and people are still trying to understand and kind of decipher what is the impact, what is the budget that they will buy. We could see that over the last, Sunday, Monday, Tuesday, when our Honorable Prime Minister announced that we should buy gold in limited quantities, people were a little cautious, confused. They wanted to understand that yes, if there is a need in their household, if there's a wedding in the family, whatever they had to buy, they would buy. But yes, the message is that don't unnecessarily buy and hoard your gold. Use and buy as much as you really need. And I think that currently there will be some amount of panic buying happening. People will expect the gold prices to go up further based on international geopolitical uncertainties, and that might get some footfalls. But I think people are in a wait and watch mode. There will be impact. See, volumes will come down. 10-15% volume is going to come down over a period of time. People will have limitation in their budget, and people will go for lightweight jewelry, but they will still buy because gold has been giving returns. Yes. Gold is a great cultural asset of the economy and the country. So it's only the quantity that will come down over a period of time.
Absolutely, and the significance extends beyond just jewelry as well. So keep an eye on stomach. That's sort of the kind of perspective that is coming in right now. Lighter jewelry is also something that you could be seeing being back in vogue, Nisha, but that's all the time that we actually have on the show right now. A lot of interesting inputs that we had, but thank you so much for tuning in.
That's right.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market your company.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So what's on the show today? Firstly, we'll be speaking with the management of Rosal Tech. Now, if you look at this counter, this stock has snapped its three-day losing streak, and the company has reported its highest ever net profit in at least the last 3 years, and that's the reason the stock has been buzzing in trade. Apart from that, we'll be also speaking with the management of Ratnavir Precision. Now, the stock is up nearly 22% in the last 1 month, and the management has guided for higher return on equity and higher return on capital employed for FY27. So how do they plan to achieve this is something that we'll be asking the management today on the show. Apart from that, we'll be covering stocks like Texmaco Rail. They have won a major international order worth nearly 4,000 crore rupees. The stock has reported its biggest intraday move since March 2024. And then there is Suryodaya Small Finance Bank. Now that stock has snapped its 2-day losing streak, and the stock has managed to gain in 10 out of the last 12 trading session, and in this 12 trading session the stock is up nearly 27%. What could be the reason behind this is something that we'll get to you on the show today. And lastly, we'll be also talking about NIT Learning. Now, the company reported its numbers yesterday. The stock is down nearly 24% in the last 4 trading sessions. Management has guided for high single-digit overall revenue growth, which means that the organic growth will be marginally lower. And why this is the case is something that we'll try to decode on the show today. Now, if you look at the markets, the Nifty has snapped its 4-day losing streak. We are up in green around 160 odd points, but sell on rise strategy is something that we clearly see on the markets at this moment, because from the highs of around 23,600 we have come off yet again. Whether we cross that 23,600 mark decisively is something that we need to watch out for in trade today. If you look at the sectoral indices, among the sectoral indices, most of them have been in green. But when it comes to the small cap names, we are seeing some value buying coming in. Even in the sectoral indices, this Nifty Metal, which is the top gainer. In fact, do remember, SAIL stock was up nearly, Steel Authority stock was up nearly 14% in trade. On the loser side, we just have IT and auto, and clearly value buying is something that we are seeing when it comes to small cap names. Mahima, which are the key stocks that have been buzzing when it comes to the small cap names?
Right, so Somit, second day of good gains coming in for Jindal Drilling, up almost 18% as we speak, this counter, and strong volumes also coming in for this one. The other one is GTL Infra, which is also buzzing, up 15.6%, followed by Texmaco Rail on the back of that 4,000 plus odd crore order win that we're of course going to talk about also in this show. Foseco is the other one, which is also up 15% in trade today. Jaro Institute also up 13%. Something like a United Polyol is also trading around 12% higher. Apart from that, there's Moltec Packaging, which is doing fairly well, up 11%. Veranda Learning also doing very well, probably on the back of the sentiment of NIT Learning as well. Ratnavir Precision is also one of the counter that is doing very well. So these are the counters that are buzzing positively in trade. But on the flip side, you have counters like NIT Learning, which is seeing a downtick of around 12% Arrow Green, which is down 5%. Something like a Visa Steel is down by about 5% and something like a Sheshashahi Paper seeing a downtick of around 5% This is on the back of the numbers that came yesterday. And something like Platinum Industries also down in trade today by about 5%. But let's get into our management conversations, and the first one that we're going to talk about is Rosel Tech. Now, overall, the stock is up 22% in the last 1 month. I think the company guides for a higher ROE and ROC for FY27. Overall, in terms of where the Q4 goes, it's been one of the strongest quarters in the company's history as well. To take this conversation ahead, we're joined by Rishabh Gupta, who's the managing director of Rosel Tech, joining us now. Rishabh, thank you so much for taking out the time. Mahima this side. My first question to you is that this kind of an exceptional quarter that you've seen in Q4, largely driven by semiconductor as well as the space business, if I'm not wrong. Help us, understand as to what your revenue breakup looks like right now, and what is it going to look like by the end of FY27?
Yeah, sure. So right now we're approximately 60% revenue in aerospace and defense and 40% non-aerospace and defense. That's going to go up significantly moving forward to 60% non-aerospace and defense and 40% aerospace and defense moving forward.
Okay, all right. The other aspect is, with regards to how overall FY26 has done, because you've seen a growth of around 87%, where the entire top line goes for FY26 of FY26. I just want to understand as to how this growth trajectory looks from here on, because last year you did a 20% odd growth. This time that's blown up to 87%. So FY27, what's the kind of growth that you're penciling in, both in terms of top line and bottom line, if you can give us some perspective?
Very similar to what we faced last year. We are targeting the similar growth, not only this year, but for the next 3 years. There's a lot of momentum in the different industries we're doing. And as a company, we're preparing ourselves for production ramp-ups and infrastructure upgradation. So that's where our focus is today. But looking at very similar increase in revenues and profitability moving forward.
If you could just take us through what has been the order inflow growth for you in the fourth quarter? How are you seeing this number to increase in FY27? And where do you see your overall order book?
Sure. So today we have 3,000 crores worth of strategic agreements. We have 750 crores worth of confirmed POs. We received 560 crores worth of POs in last year, which is financial year 25-26. And we've also submitted bids for 4,500 crores in the year. Decisions normally take 6 to 9 months after submission of an RFP.
And are you fully booked then for the year? Or do you have more capacity idle where you can take in more orders? Anything on that front?
Yeah, we can take in definitely more orders. In fact, we expanded our footprint in infrastructure. We've taken another 210,000 square feet of building space on lease, which we start in August. So as a company, last year we were 250,000 square feet. This year we're going to be 460,000 square feet. So from an infrastructure perspective, we can take in a lot more for sure.
And just for understanding, given the fact that in FY26 you did a revenue of 486 crore, even if you double this, it will be around 1,000 odd crore rupees. But you mentioned that your order book is around or more than around 3,000 crore and you have placed bids for 4,500 crore. So what is the execution time period for these orders?
So for the 3,000 crores would be approximately 3 to 5 years. For the balance 725 crores of POs would be 2 years. And again, it depends. For the 4,500 crores would be anywhere from 2 to 5 years.
What would be the margins for these orders?
Would be in the range of 17 to 22% moving forward.
Okay. Rishabh, you are also evaluating opportunities in the commercial aerospace, if I'm not wrong. What is it? I mean, have you already seen some order inflow or are you bidding for that? How is it going to fare like? Just give us a perspective on that.
We're in dialogue with our different customers. They've decided to create a supply base for commercial in India. And definitely we are one of the shortlisted companies. So looking for significant traction on that sometime in the second quarter of this year.
And you expect, the revenue flows in FY27 or that's going to be delayed considering execution timeline?
For the commercial would be more execution in 28. They would give 6 to 12 months after bid submission.
Okay. With regards to semiconductor, because, there are not a lot of listed players per se, but in the unlisted space, there are a lot of players that are playing around this theme, right? And globally also the competition is now getting intense. Just give us a perspective as to what are you doing differently that, makes you stand out as a company in the semiconductor space?
Look, it's the processes we follow. I think we've been able to create a reputation for delivering very, very high quality components at affordable prices. Our reputation is great. We're 100% delivery, 100% quality company. And because of our reputation, the processes we follow to build a component that's why we're getting traction from a lot of these customers. And it's been very successful entry into semiconductors. We've done really good revenue in the first year, which is going to go up by 400% this year. So the growth that we're seeing in the semiconductor is going to be very significant moving forward.
Okay, you were also planning to raise around 2,000 crore rupees via QIP, I believe. Has that been done? What's the progress on that front?
Not 2,000 crores. I think that's a wrong figure.
Okay.
We're looking to raise some capital, definitely looking to disinvest in a QIP anywhere from 7 to 10% of the shareholding.
Okay, and what is the progress? By when do you expect that to complete?
Dialogue is opening. We're looking for the right partners, looking for the right investors. So hoping in the next 2 to 3 months that should be completed.
Okay.
Okay, and I believe that this is going to be used for the expansion plans that you have, the entire amount.
Primarily 3 purposes. Yes, exactly. Capacity expansion to prepare for the larger platforms that we are foreseeing, to scale up production capability. The second is our operational infrastructure. We're tightening our quality infrastructure, our systems. And the third is for working capital for long lead inventory and to cater to all the production ramp ups we're foreseeing with all the different customers we work with today.
Okay, and the entire expansion that you're doing will be a mix of both debt as well as equity, if I'm not wrong. What is that ratio going to be like?
Moving forward, see, it completely depends when the QIP happens, but the idea is definitely to strengthen the balance sheet. That's what our customers are looking for, and to be prepared. The idea is to buy the raw material for the long lead items for the customer ramp-ups. So we have a very good idea of where we're heading as an organization for the next 2 to 3 years, and we're putting all the infrastructure, the tools, and the training in place now so we can execute this year and next year.
Okay, all right. Thank you so much, for taking out the time and speaking with us at NDTV Profit and, giving us all those insights. All the best for FY27.
Thank you for having us. Thank you.
All right, with that, it's time to slip into a very, very short break, but we'll be right back addressing more small cap buzzers on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Small Cap Buzzers. The other small cap buzzers that we're putting spotlight on is Ratnavir Precision Engineering. Now, this stock has been buzzing in trade today, up almost 22%, in fact, in the last 1 month. Today, also seeing gains about 8%. And this is a company which is, given good guidance for FY27 going forward. Plus, there is fundraising on the cards. And to, discuss all of this, we are now joined by Vijay Sanghvi, who's the MD of Ratnavir Precision Engineering, joining us now. Vijay, very good afternoon to you. Mahima this side. Thank you so much for taking out the time. My first question to you is with regards to the fundraise. You've recently approved a fundraise of around 330 odd crore. Just want to get a sense as to how are you going to put to use these funds, if you can give more details on that.
Yes, good afternoon and thank you so much to connect. I can just say that the board has approved the up to 330 crores of the fundraise, and we have been recently getting the approval of the capital expenditure of the project of copper clad laminates, which has been 351 crores, and the working capital for the current business and the stainless business as well. So company has been growing with the 25% of plus CAGR growth into the EBITDA, top line, and the PAT. So this capital expenditure and for the working capital, this fundraise can be done. And we have been into the process for this capital fundraise, and once upon a time we will get it the updated news. We will be updated the same.
Right. Sir, coming back on the Q4 numbers, or in fact the FY26 has been a stable and a steady quarter for you. Revenue growth around 20%, profit growth of around 37%. What is the kind of growth that you're expecting for FY27 from the company?
Yes, that would be a fantastic year for us in 26, and also there is the fantastic growth in top line as well as EBITDA and the PAT, and we look forward for the 27, 28 would be a consistent growth. You see that last 14 quarters the company has been showing the consistency into the growth, and we have been very committed with the order book and the capacity expansion. The company has been successfully Capex 1, Capex 2, and the third Capex is going on. So we could be very committed and very confident about the consistency to the growth in EBITDA of 25% CAGR growth, and as well as to the volume to value engineering can be done. And also there is a diversified capex also been going on, and we have been very optimistic and very confident about the consistent growth.
Vijay, just want to get a sense. I think if I'm not wrong, you've guided for a better ROE as well as ROCE for FY27, and this is after a decline that you saw in FY26. Considering that you just talked about your capex plans, what are the levers that will, augur growth to these ratios?
Yeah, so the ROC and the ROE it would be improved in the last year itself, and it could be consistently growing. And with the ROC and ROE, our capital expenditure have been successfully completed. Still, company would be into the part of the capital expenditures which can be planned for the next couple of 2 years, and this ROC and ROCE would be definitely improving into the strength. And equally, that company would be expanded the wings into the electronic sector, which would be very emerging sector. And also, the this copper plate laminate would be import substitute, and we have been very confident about this project.
Okay, moving on to the capex, you are talking about the CCL expansion. What is the addressable opportunity here, and does Ratnavir has a first move advantage here? Hi, sir. Okay, so yeah, as Mahima was mentioning, in FY26 the company's ROE and ROC have come down, but in FY27 they are guiding for an ROE of 16.1% and ROC of 15%. And yes, the management has recently received an approval for fundraise of 330 crore, and the management is back with us. So I was asking you about the total addressable market for CCL manufacturing, and does Ratnavir have a first mover advantage here?
Yes, sir. We could definitely very much. We have been working 2.5 years. This project would be approved with the ECMS scheme by the central government of India. Also, would be backed with the heavy capital subsidy incentives. Also, will be there, and it could be a first mover advantage. Definitely, would be with the company. Company has been a technological collaboration with the Chinese company for installation, commissioning, up to the ROI of the first line. So company would be very much aggressive into this. And also there is a very important point that the CCL product would be substitute 100% to the imports. So might be it could be one of the first company in a country to be established such kind of the product. It could be used for the PCB industries, also to the chips manufacturing, and it could be a first mover advantage has always been there, and it can be transformed the company's image and company's brand value into the Indian market. Also to be a national, it could be a proud moment for the nation itself that the first time we have been producing such products for the electronics sector, especially for the PCB industry.
Right. Okay. Vijay, FY26, you've done around 20% of top line growth, which was 49%, almost 50% in 25 and 24% in FY24. Just want to get a sense as to what is the growth trajectory from here on. What is the kind of top line growth that you're penciling in for FY27, considering that you already have a strong order book which probably could cover 2 financial years. So what's the outlook in terms of top line growth and bottom line growth in FY27?
Yes. In FY27, our business plan would be prepared, and we could be 25% plus growth into the volume. So we have been targeting for the 1350 crores of the top line for the stainless business itself. Equally to the EBITDA can be also been increased up to the 24%, and the PAT. So we have been looking to the volume to value. So the PAT can be maintained with the 30 to 35% in coming years as well. And looking to the CCL business and the stainless business together in next 2 years, over the 2 years, once upon a time, all the capital expenditure can be completed. Our target line to reach by the 2,500 crore as a top line in the next 2 years, as well as with the EBITDA of 13% and consolidated profit with the 10% plus. So the company would be moving to drive into the value, volume, and consistency over that. Thank you.
Okay, thank you, sir. Thank you for joining us and giving us the way forward for Ratnavir Precision. Well, that was the management quite confident on the growth plans going forward. Moving on, let's get in Sharad to understand what's been buzzing on the FNO side. Sharad, the index has snapped its 4-day losing streak today.
Well, that's right, Somit, but largely it's a technical up move, and we have seen that earlier at 10:45 as well. A short covering for majority of the candidates, and sea of green coming in as a welcome change. Asian Paints, BL, Adani Ports, all doing the trick above 3%. Not major sell-off happening. ICICI Bank still in red, but of course TCS, M&M, Power Grid, they are there, but nothing major to be concerned about. Even the VIX is at its, you could say, at a neutral level. Stock specific, let's see what are the moves coming in. Long build up for Vedanta and NMDC. The metal pack has done really well, so there's a good basket buying happening in these counters. Apart from the long build up companies, let's look at the other companies. The short build up, we are having Max Financial. Of course, a little bit of earnings impact coming in. Stock is down 3%. Tata Power also on a mixed set of numbers. Stock is down almost 3% as well. Long unwinding, we have LTM and also Sun Pharma, but not that convincing also as a trade. Lastly, the short covering, we are having Dixon Tech. Interesting, 7% up, and SAIL also, of course, after their numbers coming in, the stock is up almost 13% in the trade. Of course, we'll be looking at the Q4 numbers, but net, the overall sentiment, at least in the broader market, is positive.
Certainly, Shah. Thank you so much for taking out the time and helping us explain those FNOQs. But the next small cap buzzer that we're going to talk about is Texmaco Rail, because this one has won a huge order win of over 4,000 odd crores, and we've Jasmeet joining by to give us more details. Jasmeet, the stock is up 14%. Give us some more perspective on the order win.
Well, Mahima, thank you for that. As rightly said, the stock is buzzing on the back of that massive order win of over 4,000 odd crore rupees. Before we get into the order details, let's quickly understand what does the company do. Well, the company operates as a freight manufacturer, where they manufacture freights and wagon freights basically, while they also operate into the steel and rail EPS system. Now, in terms of the stock performance, the company has seen